Thanks. But I'm making progress. Yeah. What is that? Soup or noodles or something? That's fine. Yeah, well, yeah, but no, but yeah. The other one works. There's nothing I can do for like 2 weeks except wait. So I had another idea, which was the one I looked at last night, this morning, that kept me awake all fucking night. So I've been trying to build that today. Mm-hmm. AIs overthink. AIs overthink. Yeah. What you do is you tell them that they are limited to 1 sentence replies, no scripting, no coding, blah blah blah, and you have a conversation with them, and then you can actually get what you want, and then they understand it correctly. They trained me. But yeah, I can smell the noodles, but I should probably just eat the mince instead. It's still there. I'm not hungry though, because I ate earlier. I am not hungry. But what's really interesting is I do have a really, really consistent bias right here. I'm gonna play into it like a dork. And this bias is, we'll see. Please? I need to let that run for a minute. I need it to aggregate some data. It made $200 in 30 seconds.
That's hilariously funny.
In Minecraft. It would appear.
That it works in the first 30 seconds. That's all you can deduce from that.
It's been working very consistently, and I've been like resetting it and starting again. It's working fine. It's just I was trying to get it to help with the data easier to read for me. So I had all the maths there, and it was fine. I was displaying the thing, but it wasn't translating it into numbers. So I had to use the control log in a bigger block. That way I had some bigger block. Now I have an actual number, which is statistical advantage. showing me how much is being sold versus how much is being bought, so I know that that's going down.
Right.
With a 13% bias.
Interesting.
So I'm, 50 plus 13, so it's a 65% chance of it going down.
Which is high. Higher than 50.
That's all you need.
Mm-hmm.
Gonna do it. At 1 ATR. 1 ATR is about there. Now what I should be able to do is correlate. So this one here measures it for the moment of the candle, and then this one here measures it over the history of the data, which started here.
For how long? A day?
Until my computer crashes. So it resets every time I change the page or whatever. Because there's no other way to get that data except to catch it as it happens. You can pay a subscription, which is hundreds of dollars a month, to get that data.
Can you capture it somehow and put it into some
I don't need to.
spreadsheet or
I don't think it's relevant for weeks and weeks and weeks. I'm working on minutes right now. So I let it build out for 10 minutes and then it creates a bias. And when the bias says sell, then the bias says sell, and it's time to sell. We shall see how it goes.
something?
As it goes upwards. But it's down to 7% now.
A lot of market manipulation going on in the gold market, minute by minute, day by day, hour by hour.
I will run this over hourly. I just wanted to play with the minutes and see how it did. But the goal was to run this on hourlies. But you're right.
Yeah, because it is a store of value in currency. It's very complex. Paper money is worth nothing. Gold is worth something. And the gold markets are hugely complex. There's miners, there's paper gold, there's gold, physical gold, there's blah 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 blah. There's lots going on. Is governments buying gold to back their currencies? I can't see much.
It says
Without my
500.
glasses. Yeah, I can't see anything. All I see is blurs.
It says 500 profit, $500 profit
Can't see that.
on a $1,000 account.
That's great.
It
It's
is.
really good.
But it would mean I would have to sit here and watch it every fucking heartbeat.
Yeah.
Oh, that works for my ADHD anyway.
Well, you could dedicate a certain number of hours a day to that.
Why is that? Why is that still negative? I would expect that to be a positive bias now, but it's not. Yeah, see? That should have been something is wrong with it. Damn it! It should have been a positive bias. I saw that before it fucking. So this number is wrong. Something is wrong with
All
this
I
man.
see is something red. I
Yeah.
don't see any numbers because I haven't got my glasses on.
Okay.
And my vision is terrible.
That is a positive bias there. See that? No.
Sounds like meditation.
That says 50. It's called Mountain something. Mountain Winds. with-
Meditation
with-
music.
With Pocahontas.
Right. Naked Pocahontas.
She was naked.
Pornographic.
Naked
Fucking-
14-year-old.
No, that's not Disney Pocahontas, man. It's
No, it's-
porn Pocahontas.
It's clickbait Pocahontas.
Yeah. It's definitely fucking clickbait Pocahontas. Pocahontas actually didn't marry John Smith. She married some other dude. And
Was his name actually John Smith?
yeah, and Disney fucking absolutely got the story totally wrong.
Of course they did.
Yeah. Still doing it,
Always.
more or less. I'm watching another documentary.
Yeah.
Yeah.
Any good?
Yeah.
You watch a movie? How you doing? How you doing? Yes. No.
Alright, good morning. I want to quickly show you how simple Forex trading can be, because so many people overcomplicate it. They think that you've got to have tons and tons of indicators. They think that the more you know about everything that's going on in the market, the better trader you are. And it's simply not true. They think that professional traders are keeping something from them, or they know something that they're not quite sharing, and it's not true. The reason that professional traders are profitable, consistently profitable, is only partially down to the technical skills. Most of it is down to having a plan, having discipline to remain consistent, and not giving away the profits back to the market by breaking those consistent rules. That is the number one reason that people either just end up breaking even or losing money. And the reason that professional traders are able to be consistently profitable is just because they've got the discipline to remain consistent and keep the profits. They don't give them back. I know many traders that are just 50% traders. They're right 5 times out of 10, and the reason that they're profitable is because they've got an edge, and the edge is that they stick with a plan where they know that they win more when they're right than they lose when they're wrong, and they're right slightly more than they're wrong, and that is it. Now, what I'm going to share with you is a little trade that I just took on the Aussie CAD. Now, I have no idea if this is going to win or lose, but I'll tell you one thing, it's a good trade because it met my rules. And this has been a case of me just sitting here waiting for it to play out, and we're now at a level where I was able to enter. So I'm going to share this with you. So, as you can see, for starters, I've got no indicators on here. I've got a couple of moving averages. That was from some testing I was doing.
That people are pinging me, because I saw people ping me.
Patterns and swirls and lines. It's just naked price action. And one thing that many traders try and do is try and profit using these double tops and double bottoms. They try and buy the bottom, sell the top, and they end up taking every retest that they find. The problem is with that is there's going to be high probability
Did he get banned already?
And low probability double tops and double bottoms. What I do is I just wait patiently for those high probability ones. And I'm going to show you a little trade that I took here using a double top entry at structure. So let's just take a look at why I was able to take this trade.
That's
so
reverse
all,
trade.
You can see that we're pushing up here, and we are pushing into this previous level of support, become resistance, and this also happens to be one of the psychological high major structure levels at 9700. So we've got that 97 even handle number. Those of you who don't know that all of the market moves are created by psychological patterns, and we find that the same patterns are respected in multiple markets. So much of it is to do with psychology, and you're going to see that we're at that 9700 even handle number. Now you can see that we started to decelerate here. You can have this big bullish momentum during the Aussie news yesterday, and as we push up we get this nice high test candle wick. Now this candle wick right here, what this indicates is
what the actual fuck? What the actual hallucination is going on, Grok?
All the way up, okay, and then there was a rejection. They got slapped in the face, and we closed much lower, in the lower third of the candle. What that represents is some bear pressure at that level. So as we've approached previous structure resistance and support, right, we run out of momentum. We slow down, we see that deceleration, we see that slap in the face, and then we start to form this ascending channel at this level. Now, if you notice down here, I've got something called the relative strength index, and what that is it's a measurement of when the market is in overbought or oversold conditions. It's the speed of the transactions taking place. So if you imagine when Justin Bieber goes and launches his concert tickets, right, in the first minute or 2 minutes there's a fast transaction taking place. There's lots and lots of tickets being sold very, very fast, and then as the worst seats become available, the ticket sales start to slow down and they become overbought. So that's exactly what this is. It's an overbought condition, and conventionally the RSI is considered overbought at 70. Now I have mine set at 80 because I want it as an extreme filter, Again, I'm being patient. I'm waiting for rules to be met. So I have it set at 80, and you can see
Hmm,
we
me
went
too.
right up to 96 yesterday, overbought at that level. So what that indicates as well is that we're likely to see some a relief here, a pullback. The market's running out of steam, so we might see a rollover. So think about what we've got lining up so far. We've hit major structure, we've hit an even handle number, right? We've got RSI gone massively overbought, and the next thing I can do is bring on some ratio tools. Lots of you are familiar with ratio tools. If you want extra confirmation, we just go from this swing high to swing low here. You're going to see 618 right at that level as well. Now, 618 ratio is the golden mean. If anyone remembers doing that at school, the 618 ratio is everywhere in nature. It's respected everywhere. Plants, seashells, petals, you know, your arm, the length of your arm, the length of your nose, everything, right? So it's also respected in the markets. So although I don't trade straight off of fibs because I think that's crazy, there is there's confluence here, right? Because it's all lining up, the stars are aligning. So what I'm looking for is quality trades. I'm looking for high quality trading opportunities. So with all this in mind, what I'm looking for, I've already identified that this is a really, really nice level. So what I need is an entry technique. Now, what I'm going to do is I'm dropping down the time frame, so I'm going to go down to the 60 and look for a double top at this level. So let's go down to the 60, and you can see that we had this really, really nice double top here. Okay, let's just clone this, and you can see right there, we got this double top. Now, looking at the 60, see how high the RSI went up? We went up to about 96, and then what we did on the retest, now this is a valid double top because we didn't break and close above the previous high, the initial test high. If we had, then I'd be completely different trading situation. I'd be looking for continuation to the upside. But because we held and we didn't break and close above the initial test high, there's a higher probability that we're going to roll over. So what I look for is RSI gone overbought. I'm looking for that second test. I'm looking for a valid second test so that we don't break and close, so it's a valid double top. And then as long as we put in an equal test of that high, I'm looking for some bearish divergence on the RSI. And you can see, look, what I mean by that is the RSI is pushing down now. We've got that bearish divergence, but equal tests. So price is putting in equal tests, RSI is putting in bearish divergent.
Hello, my friends, and welcome back to another session with the older man. Today, my friends, we're gonna once again explore that one simple problem that we're seeing in the dating market. Women waiting way too long.
Can I please have some trading videos, buddy? I don't want this fucking woke crap. Bullshit.
This animator broke Disney's rules and actually got away with it. He explained how adding one tiny overlooked moment was actually way riskier than you realized. So you remember this movie, right? So to make it, the animation team went all out. Some of their best animators worked on it, like this guy. He's Bruce Smith, an absolute legend who created one of the best Disney villains ever. But while working on the movie, he ran into a huge problem. At one point, he took it too far when his animation was a little too dark for Disney.
There was a scene where Facilier kills Ray, the Firefly, and I had a whole different take on how he killed Ray. And the note was, that's too mean, that's too evil.
He loves pushing boundaries, and sometimes he goes too far, but he did sneak something into the movie. It's a small moment, but not something you normally see in a Disney movie.
There was a scene where Dr. Facilier is explaining his motive to the prince. This wasn't in the storyboards, but I thought it would be fun to do a physical thing like it. It's a delicate thing too in these Disney movies. They have slapping, hitting. You gotta be careful, but at the same time, have him slap the prince upside the head. It was entertaining. It was necessary.
Watch the scene again. This animator broke Disney's rules and actually got away with it. He explained how adding one...
You're aiming for the top 1%. But the top 1% of men ain't aiming for you. I'm not trying to be a dick. I'm just being honest.
There's a reason why I did that calculator.
This is the reason why women are single. Like they don't align their expectations. They look at this perfect picture and then they go, "That's what I want." And it's okay. Like we all want something amazing.
We have a fantasy in mind.
Anything that doesn't fit that picture is ignored. Then you get too fucking old. Then nobody wants your ass at all. Like, at all. At that point, by the time you lower your standard, you're like, hey, now it would take a fat guy that's this, doesn't have a college degree, makes 50 grand a year, just to not be alone.
And settle.
Yeah, and that fucking guy at that point still don't want you. So, like, that's a huge problem of, like, how social media has completely shifted, like, women's expectations. Because you really, really confuse attention with currency. You're aiming for the...
Explore more. We have 8-figure traders, 7-figure traders at our firm. It would be impossible for us not to develop elite traders going forward. We have a star first-year trader, made $500,000 in his first year of trading, literally just out of college.
Mike Bellafiore is the co-founder of S&B Capital, a New York City proprietary trading firm.
Dr. Brett Steenbarger, one of the greatest and most renowned trading psychologists in the world. Dr. Steenbarger has worked with traders employed by the world's largest hedge funds.
Lance Brightstein, the #1 trader at a tier 1 prop firm.
Jeff Holden, head of trader development at S&B Capital, the maker of 7-figure and 8-figure traders.
At our firm, we have 11 or 12 trading strategies that we're really good at, and we have a lot of edge playing in that space. We've seen a lot of data that supports the way that we're developing traders now. That's helping traders develop faster.
You can be in your 20s, walking around S&B Capital with a 20 million plus trading book.
3 things that are super important to successful trading: high quality idea generation, appropriate risk allocation, and then
most elite traders, every single thing they do is at the best level.
To have access to that elite level of talent, that's a special kind of collaboration.
We're in the business of building profitable traders. That's how we make money.
we represent one small group of all the trading that's done out there.
This is something that anybody can take and do to their own trading.
The #1 podcast in the trading space, the fastest growing, and that's thanks to every single one of you. Welcome everyone back to the Words of Wisdom podcast. We are back once again, and we are still here in New York for the final podcast of this destination, and we had to do it as big as possible. So we have a roundtable for you, for a very special roundtable indeed. We're still the #1 trading podcast in the world and the fastest growing, thanks to all of you and our incredible guests. Talking of which, today is the S&B roundtable, S&B Capital that is, and we have Mike Bellafiore, Jeff Holden, Dr. Brett Steenbarger, and Lance Brightstein. That's that correct?
Beautiful.
Perfect. I want to kick this off straight away, gentlemen, with one particular question, which I'm going to direct towards Mike, which is, how quickly are you able to judge a trader and their potential?
That's a good question. So we think about that in stages. So we're thinking about, is this somebody we want to hire for an internship? And there's 10 qualities that we're going to screen for when somebody applies for an internship. And then we're just trying to say there's thousands and thousands of people who apply for our internships. we're picking the best people for our internships. And so we're just thinking about, hey, is this person a good fit for our internship? And then after the internship, we're thinking about, hey, is this a person who is a good fit for our senior internship? Are they standing out in their junior internship? And then when they're in their senior internship, we're thinking about, did they stand out in their senior internship? Jeff and I talk a lot about that. And then when they start trading during that first year, we're thinking about, hey, what's the best team for them to gravitate towards? And we'll think about, do they deserve to be pushed towards that team? Do they deserve to keep their spot on the desk? If so, what team are we going to put them on? And then when they're on that team, we're thinking about how do we push them to do more of what they do well, and how do we push them to do a little bit of some different stuff. So I do think that we give people opportunities along the way, and we let them compete, but we don't want to say this person is definitely going to make it. They get a chance to compete during a junior internship. They get a chance to compete in a senior internship. They get a chance to compete when they start trading live. They get a chance to compete when they're on a team. They get a chance to compete after they've been here for a couple of years. And there's a big part of this where the data and performance needs to back up our personal feelings or thoughts about a particular person. We will see that sometimes we are surprised. We might invite somebody to an internship, and Jeff and I might say, let's give them an opportunity, but let's watch them carefully. We're not sure they're at the top of the board for people that we expect to be stars. And sometimes those people turn out to be stars. And then there are times when we're certain that this person's going to be a star, and they join our internship class, and it's as clear as day pretty early, like they're just not a good fit for the type of trading that we do, or they don't fit our culture, and we missed that one. So that's the way we think through it.
And if I can jump in, there's a lot in that question that we have to unpack first, because to answer it, you're talking with a group of people that are skilled, active, discretionary, truly bionic traders. We represent one small group of all the trading that's done out there. Because of that, we're looking for very specific skills that people are bringing to the table. And within that, we're looking at those skills that they bring and thinking, how can we help them maximize those skills? So we're looking for a baseline level of skill that exists, and those are the characteristics that Bella was talking about. We're screening for those. But across the board, we might have somebody who's very strong in 3 out of 10 areas and pretty good in the other areas. A lot of what we're doing is helping them understand how good they are in some of those areas. So is our firm the place where they can achieve the most success? We were in a trader development meeting earlier today with Dr. Steenbarger, and you can jump in with the point that you made of essentially, it's not just are you playing the game well, it's are you playing the right game for you as well. And we're really proud of our development process, which we can get into in just a second. And we've really become better at developing traders so they can get those early wins. We've seen a lot of data that supports the way that we're developing traders now, particularly with a focus on scalping, and that's price action scalping, not tape scalping or anything like that, but very discrete price action scalping. That's helping traders develop faster. But you still have to be playing the right game for you to begin with.
And if I could jump in, it's an honor to be part of the podcast. So let me address this as a psychologist, and I'll address it with an analogy. How long does it take you? Let's say you're dating and you want to find the ideal mate. How long does it take you to figure out if this is the ideal mate? Well, to figure out it's not the ideal mate takes maybe 5 minutes. The chemistry is not there. to find out if this is truly a life partner takes a lot more, and you need a lot more experience. There are certain things with the hiring that I've done at the firms where I work that you look for and it's just not a fit. It just isn't right. There are certain qualities that people need to have in terms of character, in terms of intellectual curiosity. And if you don't see those things, it's a no right away. But to see, like Jeff says, if there's truly a fit with the trading that you do at this trading firm, that takes a while, that takes experience.
And so, as you said, it's not about how fast you're judging that person on first instance. It's more so identifying how you're going to, fitting the culture, as you say, but then identifying how you can amplify that person to fit what is the needs of S&B Capital.
Yeah, and we probably 2022, maybe even at the end of 2021, we started to identify what we do really well, and we broke it down to 11 or 12 businesses. That's at our firm. We have 11 or 12 trading strategies, businesses. We think of each of them as their own trading business that we're really good at, and we have a lot of edge playing in that space. There are a lot of other strategies, or thousands of other strategies, that we're just not geared towards. Traders on our desk aren't interested enough to do the research. We don't have the infrastructure to do it. Dr. Steenbarger works with a lot of the funds that can play in those spaces. It's not a place where we tend to win. So we've really broken it down into what are these businesses. We need traders that can trade in those businesses, and we're looking for how can we help those traders make the most improvement possible. And if somebody's doing the right things with the right mentorship in the right way, we'll start to see that very quickly.
What changed in that period, that 2021 period?
The market?
The market.
I mean, we were coming out of 2020, 2021, and the market sort of shifted, and we had to shift with it. We had to make adjustments with it. And I think in 2020 and 2021, I mean, Lance can attest to this too, you can get away with a lot of stuff that you really shouldn't have been doing anyway. And then all of a sudden, as the market shifts and things get a little tighter, you have to really say, this is what we're great at. And I think that helps set us up for a really strong 2024 with the individual traders, the teams that we trade with, the way that we develop our traders now. That's helped us really take a big step forward. And that's been a really exciting thing to be a part of.
Definitely. What are some of those key traits, or even one or two of those key traits that you're identifying that would fit the culture at S&B?
I mean, Bella mentioned the competitiveness. We want people who want to be great. We're really fortunate to have a desk of people that really want to be great at what we do, at what they do. That's one of the kind of primary characteristics. But there are a lot of things, there has to be collaboration. You have to really want to be a part of a team and a part of a community here. We don't really have anybody that's having a ton of success just completely isolated on their own. I think that is an idea that's out there, but we haven't seen that be the case. And the people that even are having success on their own, and then they get into a team environment and they're collaborating with others, that success gets magnified so quickly.
If I could jump in, as far as the qualities that we would look for, I think the best example of those qualities is a person sitting to my left, and seriously, that have been a great part of his success. Lance has what I perceive to be just a drive for success. It's not that he's motivated to do well. There's a passion behind it and a work ethic behind it. It's all consuming, and that's special.
Yeah, and to Jeff's point as well, I think when you get competitive driven people operating on a team that's not me versus you, but us versus the market, and when you have features like joint accounts and collaborative trading and everything, it allows these traders to push each other in a productive, adaptive way, and also have more fun and better sustain through the adversity and obstacles that you inevitably face as traders. So when the market changed in 21 into 22, there were traders that struggled. And traders will always struggle during different time periods, but when you have that team dynamic, you're operating for something bigger than yourself. S&B has traders that have been doing the job 8-figure traders that have been doing it 10 plus years. And it's so funny because Bella always jokes, these traders, more than they care about their own trading, they love seeing the people under them start to grow, succeed, and find their own just place as a trader on the desk.
So that ecosystem becomes really the sort of core of the growth that all the traders and the firm as a whole is experiencing.
I was joking with Jeff before. Jeff does a great job with trader development. So I was trying to say this in a way that that was appropriate. But I almost feel like at our firm that it would be impossible for us not to develop elite traders going forward because of the fact that we have role models. We have 8-figure traders, 7-figure traders, mid 6-figure traders who run teams who good developing traders get to join and collaborate with, who will pull them up, who will help them get over whatever that line is to be consistently profitable and better, who are just going to pull them up to be in themselves mid 6-figure a year traders. And that doesn't mean that we don't have to do a really good job with our trader development and spend a lot of time with that, but collaboration is that important. We have a star first-year trader at our firm, made $500,000 in his first year of trading, literally just out of college. He sits on a call every day with Shark. He gets to listen to Shark in real time, sharing his trades. He gets to see all of his entries and exits in real time. He's in a lot of these trades. Shark is a multi-8-figure a year trader and multi-8-figure a year trader. Probably, I think this is fair to say, one of the most successful active discretionary traders in our space of all time. You know, if there was a Hall of Fame for active discretionary traders, we'd be talking about putting him in that. This star new trader, his talent is he gets to sit on a call every day and listen to this Hall of Fame active discretionary trader with immense talent himself. What do you think the result of that's going to be?
It's that compounding effect.
There's almost a 0% chance that this developing trader isn't himself one day going to be an 8-figure a year trader. It's almost a 0% chance.
And it permeates everything we do. I mean, Dr. Steenbarger has written about this, and I think we took it to heart when he spoke about it, but mentorship is not a one-on-one thing. Especially early on in a trading career, you need a community. Your mentorship should be 8 or 10 different people that you're talking with for different things, different reasons. So although this trader gets to speak with Shark on a regular basis, he's also reaching out to other traders on our desk. He's worked with Lance in the past. He's worked with Dr. Steenbarger in the past. So, you know, everything we do has this sense of community about it, where although you're getting a ton of information from one place, you know, and it permeates across everything, there are people that are getting mentorship, traders that are getting mentorship in places that maybe are a little bit outside the norm. But the thing that's interesting is the traders are actively seeking it out. The developing traders aren't sitting there and saying, I hope somebody comes and mentor, will you please mentor me? Like that's not the way the conversations are going. The developing traders are developing quickly. And that's an expectation we have on the desk, is you have to be, we expect, to Bella's point, that you're going to start developing quickly. We have the resources, we have the structure, we have the training, we do all this stuff so that traders can develop quickly. Well, a part of that development and a part of that desire is that hunger to be great. So you're going to be going out and asking questions. But you're not going to say, hey, teach me this. You're actually going to say, I was working on this and I know you do that. Can you help me understand that a little bit better? Can you please help me see what you see so that I can then develop that, so I can bring it in? And one of the reviews that we got that was incredible was this trader talking about how he develops. And we can talk through it right now. Is when he sets a goal for himself, he sets the goal, and then he goes and does his own research before he talks to anybody else. And then after he's done his research, then he reaches out to traders and he tries to get that mentorship. And then after he's done that mentorship, he's done the research, done the mentorship from other traders, then he starts really small in pursuit of that goal. That's very different than setting a goal and pursuing it, hoping that some people will show up along the way. He's showing up and adding value to the traders even before he's doing his homework, and then before he has those conversations. He's showing up ready to help them just as much as he's hoping they help him. And then he's taking that and putting his own spin on it by starting small.
Jeff mentioned such a good tell there, which is
this is New York. We accept anywhere else we wouldn't accept it, but in New York we accept it. That's it.
Jeff mentioned such a good tell, which is I think at a lot of firms you can provide the resources, but the question is the self-selection of who actively takes advantage of them. Because you can bring a horse to water, but you can't make it drink. And it doesn't matter what you provide, it's always on the individual, right? Unless that individual proactively takes action and has that why and that urgency to do it themselves. And so when Jeff was telling that story, I know exactly what trader Bell is talking about. And even in the prior year before him, their other star trainee was a trader that anytime I was on the desk, he would always just have a barrage of questions for me. And I remember there would be times when Bella would tap the trader on the shoulder and be like, hey, you know, Lance needs a little break. Lance needs a little break. And the traders that are taking advantage of asking me the questions, of asking Dr. S the questions, that's one of the best tells I think there is. Like, who's the person that when you give them resources, they respond and take full advantage
That
of it.
trader who just finished out their second year was just shy of $1 million.
Wow.
That's great.
And you could see it years ago. He had Jeff says this, uses this word really well. He had a sense of urgency that was different than even all the other really talented, ambitious traders in his class.
Is that a trait that you look for when you're early on, when a trader's coming through the doors, of how much their eagerness to try and soak up knowledge and experience from other traders?
Be careful with the word eagerness, because that can get misconstrued in our experience. Lance said it very well, and I think that when we're talking about this sense of urgency, eagerness is you really want to make it. Urgency is I feel compelled to make this work, and I am going to take advantage of every opportunity that I get. So when this trader, and I can tell a good story about this trader too, like, so we were down in Miami, and this trader happens to be in Miami, and we had gone to dinner.
Was this the dinner where Lance stuck us with the bill, and it was our personal highest bill ever in the history of SMB?
I helped the firm set a new PR.
Was it that dinner?
It was that dinner.
Okay.
It was that dinner, and we did set a new PR, and it was a good dinner.
Yes, I hope so. It was.
It
Was a very good dinner.
It's a very good dinner.
It was an impressive bill.
It was an impressive bill too. And we're all deferring to Lance, but I do have to say, at that dinner, you did say it's okay if we go over the minimum.
That is a true story.
So, you pulled Lance's stop, and he went way above his stop.
That's
on
why
that
I
one.
normally have risk limits when people take me out to dinner.
I
If
did.
you don't give me guardrails, I'm going to fly over them.
I did make the mistake of telling the concierge that it was okay to go over our contract signed maximum amount for the bill, and he did. He made sure that happened.
But we went to this amazing dinner, and we're sitting there talking about trading for a large portion of the dinner, talking about the trades, talking about opportunities that might be setting up, telling trading stories of things that we've seen or experienced, or people that have come and been a part of our firm or of our community even. And after that dinner, that trader was like, hey, let's grab an Uber back. And it's like the entire time he's asking questions, but he's not asking questions like, help me understand this. He's putting together the pieces of what he knows already and then trying to fill in the blanks. So you can tell he's already been working really hard at all of these things before he ever asks a question. That makes it so much more of a positive conversation for everybody involved, because he's not saying, teach me this. He's coming and saying, I understand this much, but I recognize that there are some gaps here and there. So that sense of urgency occurs because of that, or it shows up with that. You know, it shows up in every trading opportunity. Traders on our desk, I mean, we had some really good trading opportunities recently, and one of the guys left so upset after having his best day ever because he knew that he could have done so much better. And the conversations on the desk weren't, oh man, you did great, you should be really proud of that. There was a little bit of that, but there was more immediately, why are you so frustrated when you had a really good day? And how do you harness that to make sure that you're putting that into a positive spin? How do you take that so next time when that opportunity for the afternoon is setting up, you're not sitting there thinking about how good of a day you're currently having. You're sitting there and taking advantage of that opportunity, because the trader to his left and the trader to his right did take advantage of that opportunity. And they were trying to push him into that. And you could tell that he was just, I'm up so much, I've never been up this much before. And it was hard for him to get through it. But I have no doubts that he's going to sit there and learn from that experience. And the next time he might be leading the charge, looking for that. You know, that sense of urgency to not only take advantage of every opportunity in mentorship, but take advantage of every trading opportunity that you get that's a really good trading opportunity. Really make the most of those.
Profitable trading really boils down to two things: opportunity and volatility. that is why the podcast has partnered the highest it's ever been. And all of that really pointed towards one man, President Donald Trump. During his period in office, all it took was one tweet, and that would present so much volatility, and the right traders would take advantage of that and would create their record P&Ls. And that is why those same traders are so excited for this new period between 2025 to that futures traders love. Tradervate, NinjaTrader, and
This is how I get perfect entries. First off, while looking at this chart, we can see we have a bullish fair.
Hi, Alpha Capital.
TradingView directly. Absolutely incredible. The futures traders who watch the podcast, and there are thousands of them, say that they love Alpha Futures. Here's just some payouts that you can see on screen that have consistently gone out with them. What I personally love about Alpha Futures is they have the highest drawdown to target ratio in the entire futures industry, meaning you get the most drawdown to trade with to hit that target, which is absolutely phenomenal. Now, I don't know if I should be saying this, but Alpha Futures has actually brought Alpha Prime, which is the first of its kind in the entire industry, where traders can get a salary and trade with real live capital, get access.
The saying, each one, teach one. The idea is everyone is motivated to learn, but everyone is equally motivated to share what they know and to grow others. I know, Lance, you shared with me the idea at your previous firm of one up, one down. It's very similar. The willingness to learn, but an equal passion to share.
Yep. And I think all of that is important because if you think about it, in the trading world, there isn't really a problem that hasn't been solved before, right? Guess what? Probably for the last 50, 100 plus years, traders have struggled with overtrading, with FOMO, all this other stuff. And so the power is when you're in an environment where you have access, as I like to say, like imagine a huge crazy maze and you don't know how to navigate it and get through the other side. When you're surrounded by people that have navigated that same maze and have figured out how to get to the other end, no issue in trading is ever new or unique to you. So when you're surrounded by the resources and the environment that you can ask Dr. S, who's worked with some of the top hedge funds and traders in the world. You can ask Jeff, that has developed, I don't know, probably hundreds of trainees and interns you've dealt with, and Bella, who for, well over a decade has been, 2 decades, been mentoring and overseeing traders. You get so much more efficient at finding solutions to these problems. And you can ask the trader that was in your shoes 1 year ago, 3 years ago, 5, 10, 15 years ago, and you get all these different perspectives to find an answer faster and more efficiently.
If I could jump in with a question of my own.
Wait a second. Who's running this podcast?
What's
going on here?
Now we're
Been
gonna all
hijacked.
look like idiots. Now Chris stumps us.
You know, who around this table has actually spoken with the most trading experts?
Ooh. I'd say he's
Well, I think I'm looking at him. You know, Riz, you have spoken with a number of successful traders and successful people in trading. And I'm just wondering, from your perspective, is there a common thread, a common theme, a common element that you have seen in your podcasts with trading success?
I think in terms of the level of traders, into like professionals and verified and you know, really large P&L returns, it's more minuscule in comparison. By the end of this tour, hopefully that'll change. But with those ones, I think it's the competitiveness, as you mentioned, is one thing. But I think it's that drive. They have this drive. They love the challenge of the market. So that competitiveness, I guess, is against the market versus maybe other traders that might be around them. They're always wanting to compete against the market and perform as best as possible. Because a lot of them I've had recently are more the trading veterans who have been trading for 20, 30, 40 years. And the only way you can get through that length of time trading could only be if you have that, well, one, you have obviously edge, then you have that competitive nature and that passion for the art of trading. I had Jason Shapiro, I'm not sure if you know who Jason Shapiro is, he's in Market Wizards. And he was interesting because on the podcast originally he said, like, you know, I'm not passionate about the markets. You know, I don't enjoy it. And then I said to him, like, you must enjoy it because you've done it for 40 years. You still get up at 4 a.m. to check the market quickly and then, you know, do some check on your positions and then go back to sleep and so on. You're doing all this when you don't need to be if you don't enjoy it. And then he kind of reflected because actually you're probably right. But yeah, that's what I'd say. Hopefully I'll have another answer for you maybe by the end of the tour. But one thing I did want to ask you in terms of that urgency, if you ever notice in a trader that urgency is starting to diminish a little bit or isn't as at the level that you want it to be at, what do you do as a firm? Like, how do you operate around that?
Well, there are traders that don't continue on at our firm, and sometimes that sense of urgency or losing that sense of urgency is one of the reasons. And that's usually a pretty clear sign. You know, first we'll have a conversation, or they'll have a conversation with Lance or Dr. S or somebody at the firm to understand, is there something going on? Mm-hmm. You know, there could be external factors that are going on, and in that case, you have to address them. Dr. Steenbarger said it really well before of you want trading to fit your life, not your life to fit trading. I think we struggle with that balance quite a bit, but that's, you know, something that I think is important to recognize. If there is something going on that's causing that, you know, okay, we can work around that. But if a trader is recognizing that this style of trading isn't for them, there are traders that have gone on to do great things that isn't being a skilled, active, discretionary trader. Traders have left our firm and gone, or we've kind of helped them recognize that this isn't for them. And they've gone to other areas of finance and had a lot of success, mainly because of the skills that they've built, not necessarily just at the time here, but the skills that they've built over their life. You know, we feel really fortunate to be able to recruit really well, to bring in great traders, great people, more importantly, and they're likely to be able to find success. For us on the desk, it just happens to be as skilled, active, discretionary intraday traders. But for others, it might be something else with regard to finance. I mean, finance is a huge world. Dr. Steenbarger works obviously with people outside of the intraday trading space as well. And, you know, there are traders that have found that sense of urgency for this isn't there anymore. But they maintain those skills and they transition on to do really great things.
If I could jump in, Jeff, with an additional perspective, I find that many times the passion doesn't just go away, but it evolves. That what someone was passionate about early in their career, now they have a different source of passion as they mature within that career. So a great example would be the trader who's been very successful themselves and now has a passion for mentoring other traders. and developing their talent. And they're still interested in trading, and they form a team, and that's something that happens at SMB. But now the passion has evolved, and that is a new source of motivation that keeps them engaged.
Because trading is, of course, it requires so much from you to do it at such a high level, consistently as well. So I can imagine that there comes a point where a trader kind of is still passionate about the markets. It's like me, to be fair. Like, I don't actively trade, but I love trading. I love the markets themselves, and that's why what kind of facilitates that for me. But can you take us through a day at SMB Capital? Like, what does a day-to-day look like?
I mean, it depends on the day. And are you talking about for an experienced trader, a developed trader, a new trader? What do you think your audience would like to hear? Because
I think new trader probably be good, and then maybe we can go through maybe one or two of them. But the new trader to begin with probably be best.
I mean, I think people would be surprised how routine a lot of the habits are. And Lance the first thing he did when he started working with us was sit there and basically tell all of us to read Atomic Habits. And I think you said that for the first 3 months you were with us. Have you guys read this book? It's called Atomic Habits. Have you read this book? Here's a copy of Atomic Habits.
I need a commission at some point because I've easily purchased like 200 of those.
Well, didn't he say he was going to buy you dinner or something?
Supposedly he owes me lunch. It has not yet occurred.
Okay.
So reminder, James, if you're watching this, you owe me lunch.
Yeah. That's great. But that's so what you will see is people starting their process and their habits, and they're doing it in a couple ways that I find fascinating. That I don't know if this exists outside of it. It certainly, when I was an independent trader, it didn't exist for me. They're doing everything with an element of collaboration, right? So they're not just coming up with a game plan, but they're coming up with those ideas, that idea generation. The three things that are super important to successful trading: high quality idea generation, appropriate risk allocation, and then trade management or risk management, however you want to talk about that. We call that execution, right? So those three elements are just critical. They're baseline. You need to have those to be a very successful trader. And then there are varying skills associated with each. But those three things you kind of have to get right to be able to be a really good trader. And all these habits that you'll see on a daily basis when somebody walks in the office, they're pulling up what they were thinking about the night before. They're pulling up their game plan from the night before, and they're kind of checking, are any of these ideas valid? Or maybe they still have trades on, and they're checking, are these ideas still valid, or how am I going to make adjustments? And then they're collaborating with others, talking with others about that. And this happens for every trader that's on our desk, every trader in our community. People are collaborating a lot, so you're getting instantaneous feedback. And then you're also working with other more experienced traders who a lot of times, or people who have experienced markets more, so you're getting mentoring kind of through that whole thing. And then you're really focused in trading. Yeah.
Let's take a break for a minute there, guys, because I want to tell you about our sponsor, TradeZella. TradeZella is the #1 trading tool for all traders. It doesn't matter whether you're a crypto trader, a futures trader, or a forex trader. Whatever trader you are, all you do is connect your trading platform directly with TradeZella. It automates and makes your trading journaling so easy. If you want to be a profitable trader, you need Trading Edge, and that is exactly what TradeZella does. It allows you to identify edge, maintain your edge, challenges, 1-step, 2-step, 3-step, swing, day trade, scalp, whatever. It's 20% off across the board. RIZ, use the code. Links in the description below. Let's get back to the episode.
Yeah, sorry to jump in, but maybe an obvious point is that day-to-day schedule of collaboration, that happens because they're at a prop firm. That happens because they're in a team environment. The trader who's trying to learn on their own, by themselves, in isolation, they can't have a daily schedule like you're describing, Jeff.
Yeah, but I'll push back a little bit, because I think there are some really good, you maybe don't have the structure in the same way, but there are a lot of more independent or I don't like the term retail traders, because I don't think that's appropriate.
Make sure I change this.
Well, no, but I think that's like, there are people that are interested in markets, right? And then as you advance, you become an independent trader, right? When you start making P&L, you can have an interest in markets to begin with, and then you can advance to becoming an independent trader. At the independent trader stage, I think that there's so many people out there that are really good, doing great work, and so many communities out there that are really approaching things from the right perspective, that you can find. It doesn't take a team of 50 people. If you find 2 other people and you're collaborating on a regular basis, that becomes super powerful. And I think that that availability is there. I do think it's intimidating sometimes to actively put yourself out there and say, hey, I'm doing good work, and not just on Twitter, like I'm doing good work and you know, somebody follow me, but you know, to actually just focus on the work and then be looking for other people to collaborate with. I think you can synthesize it. I really believe you can.
And there definitely is collaboration going on online, and I think that's great, and that's one of the really good things about some of the trading communities, online trading communities that have evolved. But to push back again, and to reiterate Bella's point, how many traders can walk into the office and interact with Kenny Sharkness, or interact with my friend over here to the left, with Lance? That's a special kind of collaboration, to have access to that elite level of talent and ability. And I think that is part of what makes the day special for the folks who come here.
There are a lot of resources that you get at a prop firm. So I'm not really in the business of telling people how they should decide to roll out their career. I will say, if you put me on the spot and said, should you try and be an independent trader, or should you try and be a prop firm trader, I would say for almost everybody, being a prop trader is going to give them the best chance to find out how good they can be. And the reason for that is just resources. So at a firm like ours, you go through an internship. During that internship, you receive high quality training. This is training that we've put together to make sure that we're developing talent here. And that internship has 2 phases. There's a junior internship and a senior internship. You're going to get paid when you get hired. You just focus on trading. That's a pretty big benefit. You have proprietary technology. That means you're not going to miss fills. You're going to get the best entries, and you're going to get the best exits on every single one of your trades. That's going to mean you're going to make at least 30% more in P&L because you have proprietary technology. You're going to have ongoing mentoring, coaching from people that are sitting around this table. You're going to have access to real buying power. It's not uncommon to be 20-something walking around the halls of S&B Capital with a book of over $20 million. You can ask, if you have a little bit of a track record, for $50 million to express on a trading idea. That helps you make a lot more. You join a team. That team is run by an experienced, successful, high P&L trader with some good experience in mentoring as well. You get access to their trading strategies. You interact with them on a daily basis. You get access to multiple products. You can trade equities and options and futures at a firm like ours. You can do it also, by the way, in terms of supplementing technology, you can do it as just a discretionary trader, or you can do it as a discretionary trader and an automated trader. You can do both here. You can have 2 career paths. You can have an idea back-tested, forward-tested from your desktop, and if it has some edge, run it live. The resources that you have at a prop firm are much more than you would have if you're sitting at your home in front of your computer, banging away at the keys, trying to make a couple of bucks, trying to make something for yourself. We're set up to help you build a career. We're set up to help you become, if you have some ability, a 7-figure and an 8-figure a year trader. That's the business that we're in. And so if people are serious and they have a passion for wanting to be a trader, you should put yourself in the very best position you can for your career. And it's too risky to try and do it without some people that have been doing this for a long time, and without real capital, without real technology, without real support.
The biggest thing with regard to that is everybody that's a trader has a runway, right? You're familiar with the term runway?
In terms of capital?
Capital, time,
Yeah.
whatever it is.
Time.
You know, a lot of time it's time. You know, for me, I had 1 year when I started. I gave myself 1 year to figure it out, right? So when you know you have a runway, you're going to act with that sense of urgency, or you better act with that sense of urgency. And for every trader, we have a runway. And sometimes it gets pushed way, 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 way out there as you get better as a trader. But, you know, one thing that we're really passionate about on the desk, and I think we're getting better at it, to Bella's point, is how do you get those early wins with somebody that's developing so that they can extend that runway out as far as they possibly can? You know, in our process of helping people build that track record really, really, really quickly, our process for helping people collaborate very quickly, our process for making sure that you're remaining a little bit competitive and driving, and not letting that competitiveness turn into an external competitiveness where you're looking at what this person's doing or that person's doing and hoping that you can do that one day. It's more, how can I really make the most of the opportunity that's presented to me today? All those things are skills that we've had to develop. How do we help people have that success very, very quickly? Because if we don't, then they're never going to get to that 7 or 8 figure a year position. But if we can work with them to help them get those quick wins and push that runway out, all of a sudden you're talking about someone's trajectory changing. And one of the traders we were talking about earlier, you know, he was at a point starting out where he always did really good reviews, right? He was great at like breaking down the trade, and everybody here at this table has read his reviews, but there was a disconnect. And that disconnect occurred because his risk allocation wasn't appropriate. You know, so he'd be risking too much on something that wasn't really an A opportunity, and too little on something that really was an A or A plus opportunity. And his P&L kept kind of flatlining because of that. And we learned from that, and not just for him, but for everybody. It's, okay, we have to address this very early on in their trading career. And Lance has been helpful, and Dr. S has been helpful, and Bella has been helpful in helping us learn what are the things that you really need to get right very early on that are going to have a big impact. And even if they seem a little challenging when you're starting out, how do you make sure that those become wins now and not something that is going to hold you back later? Because once you start up that development curve, you want to be pushing that runway out as far as you possibly can, as quickly as possible. And because we've had the opportunity to learn about that and see it at scale, you know, the groups of traders that we have come in every year, we get to learn from them. And we get to see, what did this person struggle with that was a little bit of a surprise? You know, somebody we thought might be really good. What did they struggle with that was holding them back? Okay, do we need to bring that into our training earlier on? You know, what are things that really are helping everybody grow? What are wins that we're seeing across the desk that are becoming our strengths and really positive for us? We get to incorporate that into our development and share that with our community, which really does help everybody faster.
And you did mention about having 11 to 12, businesses, so like playbooks that you guys focus on. Do you guys ever worry about the correlation between all the traders, like all trading the same strategies and the P&L?
That's a question for our risk manager.
Exactly. If I could jump in there, I've worked at different firms, and that is a real risk when it comes to collaboration. People share information, they share perspectives, and they might share the same ideas and trades, and they might become correlated. And from a risk vantage point for an overall firm, that's a vulnerable place to be. So the challenge is how to collaborate and gather information and perspectives and experience from other people, but how to synthesize that in our own unique way so that we're doing different things. And not all firms are good at that. Not all people are good at that. It's a real challenge.
Yeah, so what that means, if we have 12, 18 strategies that we're running, there are subsets of those strategies, many subsets of those strategies, and traders who are different and unique decide which of the subsets of those strategies are best for them and run those strategies.
And then you have obviously different allocations of risk, as you mentioned, with a risk manager, which is interesting because going back to that topic we were talking about earlier, the comparison between prop trading and then being independent at home, that's another element. Like having a risk manager who can hold you accountable, can discuss with you when you're hitting certain risk limits, etc., which someone at home has none of that. They're just absolutely alone and a lot of the time probably not understanding what's going wrong.
I think that's an undervalued asset, benefit for a prop firm trader. There are prop firm traders here who, if they were just doing this on their own, would not have done as well. They may have blown up, but they're here and they're making 7 figures a year, 8 figures a year, because they have taken the time to sit with a risk manager to develop a plan for how much they're going to risk on every trade, how much they're going to risk maximum per day, how much they're going to risk maximum per strategy, how much they're going to risk maximum per week, per month. And they develop rules which they buy into, they help craft with a risk manager and share with that risk manager. And now this risk manager is there to be your big brother, to look after you, to help facilitate and help you do better in your business. And so when you are getting near the max for a particular strategy, the risk manager will tap you on the shoulder and say, hey, where's our exit? Remember the rules that we agreed to pre-trade. You're at those levels, you're near it. What's your stop? Okay, thank you for reminding me that. That's right. I don't want to lose more than $150,000 on this trade. I'm at $135,000. My stop is X. And then the two of them work together on that. And then, you know, there are plenty of trades, if we're being honest with ourselves, that will take the $150,000 loss. If we didn't have rules in our moments of weakness, we may have acted against our self-interest and our P&L and let that run to a $500,000 rip and maybe worse.
One aspect that I find pretty funny just from the internet is obviously I come from the prop side of the business, and I've so often seen the response, oh, like, I would never do prop. I don't want to give away a piece of the cut. And it's so short-sighted because it's like, wait, would you rather have 100% of nothing or 100% of a small number rather than a lower percent of a much, much higher number? And it's just such a simplified way of thinking. Then the other thing you got to think about is, to Bella's point, when you look at traders online, you don't see, again, the denominator of how many traders didn't make it because they didn't have proper risk management. How many traders didn't make it because they didn't have proper mentorship? How many traders ended up a $100,000 a year trader when they could have become a $1 million a year trader? And it's, of course, there's no way to know and see that data, but I think it's something people need to think about when they make these reflections and decisions.
Because in terms of percentage, we haven't touched on that, but if I'm not mistaken, is 50%, 50-50 for the traders?
You can earn more than that if you are experienced and your performance dictates it. You can earn up to 65%. But to Lance's point, there are some traders who are very well known as independent traders who I know who make, maybe $1 million a year, which is great, which is amazing. Who I know if they were here would make 8 figures a year. And we've talked to some of these traders, and it bothers me a little bit that they aren't here making the 8 figures, and they're preaching that they should be doing things alone where they're making $1 million. And I guess it is what it is.
There's a lot of talent, potential, and money out there. And I think, look, whether you go prop or not, you always want to find the way that's going to lead you to maximize your potential, whether it's in trading or anything in life. And regardless, so much of that is environment. And look, it doesn't mean you need to come to New York. You don't need to join a prop firm. But what is going to be the environment that's going to lead you to have your best chance of success, however you define that? And at least be intentional and put in the effort to optimize that, and life gets a lot easier.
I mean, from my experience, a lot of the independent traders, they talk as if they want the goals of getting 7-figure returns, 8-figure returns. But I truly, in my opinion, I don't believe they understand what that takes and what would be necessary to actually achieve that. I don't know. Do you guys ever get much interaction with the coin retail space, or the more independent traders often, or?
Yeah, I mean, there's a part of our. Well, why don't you go ahead?
Yeah, just real quickly, I end up hearing a lot because I participate in social media. I hear a lot from independent traders, and many times they feel lost because they don't have that mentoring. If you step back and you look at any major performance field, look at athletics, look at the performing arts, how often do people develop completely on their own in isolation? It's always through a team structure, through a mentoring structure, through growing, through instruction. And the independent trader who's trying to make it, they're often motivated, but what I hear from them is a lot of frustration because they don't have that structure of guidance that they would have in a professional setting.
And you mentioned Twitter, or hearing from the retail space, and I thought everybody on Twitter was a millionaire. I thought everybody drove a really nice car.
Yeah.
I mean, we were joking about this earlier, but Shark, Bella, and I all got the same car about a year and a half ago, maybe.
Really?
And
You
so
all
we're
have Honda Pilots?
well, that was going to be the question. Don't spoil it. I was going to ask you what car you think we got, because we were all excited. We were talking about the different packages that come with it.
I love my car.
What we're going to get, and I think all of us love the car. But I would be curious what you would think that car might be.
Green Lamborghini? Or is Bella more of a red Lamborghini guy?
Bella's quite tall, so Lamborghini might be hard. I don't know. I'm not sure.
It was a Volvo.
The
But
Volvo.
we're all excited about that. And then, like, you go online.
You all have kids, though.
Yeah,
There
but
we
like,
go.
even, yeah. I guess that's true. But you can sit there, and the perception is all about that. But that's the scary thing. Is it's really easy to look at the perception. You can fake the perception. I mean, we were in Miami with Lance, and he was like, "I bet 3/4 of these cars are rented," and that's a big thing. And you see it, and it's flashy and everything. That can easily be faked, or whatever. And same thing with mentorship. People can say, "I'll teach you exactly what to do. I'll show you exactly what to do. Just do this, and then you'll be successful." And that works for a period of time, but then when push comes to shove, you have to be able to adjust. And when the chips are down, you want to be learning from people that are making real money consistently, and you want to be learning in a way that's going to help you get early, quick wins. I mean, the stakes are way too high for us to not help traders develop rapidly. As Bella said, the expectations on our desk are way too high for us to not help traders progress very, very quickly. If you want to walk, I remember my first day walking in, I was like, "Oh, that's Shark, oh, that's Swang, oh, that's Dan Sheehy," like these celebrities, right? Almost. And then Lance came, and everybody was like, "Who's that guy?" But no, I mean, but it was like when Lance first walked in, everybody was like, "This is Lance," and we're so excited about that, and it's like inspiring to see that. But then you sit there and you work with these people and you see the way they work and you see how passionate they are about developing their skills. And you recognize you just have to be doing that. You have to be there. Otherwise, if our desk was not filled with people that are really excited about getting better and developing their trading skills, pushing their runway further out, making the most of every opportunity.
And what are the norms? What are the norms of the people you surround yourself with, right? And if you surround yourself with people that smoke, that drink, that party, you're probably going to be smoking, drinking, partying. Okay, and if you want to do that, great. But when you go into the right environments, if you have a bad day, it's not an acceptable norm here to, pound the table, say F this and go hit the bar and not learn anything from it. That's not an acceptable norm. And when you have high standards, you set certain cultural norms, which is the norm here is you have the potential to be, not even potential, you are expected that you will become a 7-figure trader. You are expected that it's totally possible for you to become an 8-figure trader. You are expected to focus on the process, not the outcome. You are expected to do a daily report card. You are expected to collaborate. And when that is the norm, and when you are not ostracized, but when you are not part of the group and the community, when you don't follow those norms, and all those norms are in your best interest to help you become your best self and to get good sleep and have Oura Ring sleep challenges and to have exercise challenges and to do all these things, when that's your base level community, that's very, very powerful.
Yeah, I'm going to trade in my Ferrari for a Volvo. That's it.
I should, for the record, point out that Dr. Steenbarger has a Porsche and Lance has a Corvette. We would like the audience to continue watching, as Jeff has basically turned off 75% of the audience that they now know we drive a Volvo.
We drive Volvos, yes.
Well, I think it's interesting. Obviously, you can like what you like and what you enjoy and so on. But
people are just clicking unsubscribe.
We might as well just wrap.
Yeah.
But yeah, the reason I asked that, or I said that sort of statement, is because of that fact, though. Because I come from the sort of retail independent trader space. That was the key part of the audience, and I've interacted with them for years, and that's always been the case. I find it fascinating always to hear their goals being that they want to be 7, 8, 9-figure traders, even, but the work ethic, the drive, the as we talked about in terms of urgency, it's just not there.
But do you think that the goal is so that's lovely to have that goal. If I want to be 7-figure, 8-figure, 9-figure trader, there are traders that have that goal on our desk, but that's not what we're focusing on.
Exactly.
We're actually focusing on what they're doing over the next month. I mean, is that it's
that's
great
not happening
to
either? Yeah, no.
That's not okay.
That's
that
what
was
I'm
my
getting
question.
at. Is they have all the things, so they want to do all the things that you guys are actually implementing and doing, for example, without doing it.
Well, just set a goal for 1 month. What's the most important thing that you need to work on? I mean, there's a trader on our desk that was struggling for probably too long last year. But there were really good trading opportunities first and second month of the year, and in 2024. And he just recognized that he wasn't taking advantage of those in the way he wanted. And a part of it was he was thinking about, how is my year going to go now? So he was thinking, how's my year going to end up? I missed these opportunities. And if you just kind of mentally checked out and stopped focusing on what's right in front of me, he could have really missed all of the amazing intraday trading opportunities we had throughout 2024. Instead, we worked with him, and it really isn't that much. It was more just having a brief conversation and saying, well, what are you working on right now in your trading? And he recognized he was thinking about the entirety of the year, which then ultimately led him to think about, where am I in my career and all that stuff. And when he just focused on what am I going to do over the next month, he actually started to have some really quick wins again, and that got everything flowing in the right direction. So it's great to have those long-term aspirations. And you'll hear traders thinking about that stuff on our desk, but most of the time the discussion's around, what am I doing right now? What am I doing over the next month, 3 months that I really need to really hone in on? And a lot of that's pretty straightforward skill development stuff.
We become who we surround ourselves with. If we're in isolation, we don't surround ourselves with anyone. If we're around people who have that urgency to learn and develop, we take that in. That becomes part of us. An important part of our environment, whether it's our social environment, our work environment, our spiritual environment, is surrounding ourselves with the people that ultimately we would like to become.
And in terms of obviously being at SMB, as you have those team environments and you have the collaborations, but equally as a firm, your goal is to maximize the potential and aid that potential as much as possible for peak performance. But with something like the markets, it's constant changes, different dynamics. Like, how do you guys as a firm almost stay ahead to prepare your traders as best as possible for dynamics such as like President Trump's coming into office now? We're going to see a huge shift, no doubt, in a lot of policies and all sorts. Like, how do you guys as a firm look at that and go, okay, our traders should hopefully, we need to be prepared, we need to be ahead of the game, or at least be aware and have our eyes open of things that can change and dynamics that can change?
I mean, I think there are a couple ways.
I think that's our job. So that's the partner's job. And so remember when the markets were really easy during COVID? I wouldn't say they were really easy. They were very opportunistic during COVID, and people made just a ton of money. Those are great. And then towards the end of COVID, as we were kind of coming out of it, the Fed started to raise interest rates. And when the Fed started to raise interest rates, we got a very different market. The strategies that were working in 20 and 21 stopped working towards the second half of 20, maybe even the second quarter of 22. And it does take, I think, and I remember Steve Spencer, one of my partners, and myself, very early, when the Fed started raising rates, said, we're going to have a very different market. You should lean on your shorts. You should not think that buying pull-ins is going to work like it did in 20 and 21. And here's why. We asked Dr. Steenbarger to come in and talk to our firm about, hey, what are the roadblocks and headwinds that hedge fund traders are talking about? Let's educate our traders. Let's give them exposure to some of the macro headwinds, challenges that are in front of this new market, this new regime. What worked in the past is not going to work in this market. There's a different monetary policy that's going to affect stocks. And we have other senior traders at the firm who are going to speak up. And so that's the job of partners. Now, look, none of that's going to go perfectly. It doesn't mean that every trader on the desk, and certainly it didn't. It wasn't the case that every trader just started listening from day one and did all the right things. But leadership in that regard is important.
And that was a really big learning experience for us because it forced us to look at the style of trades that were occurring. And okay, especially for developing traders and then traders coming up curves, how do we help them more? How do we help them adjust? And the trades that we make are pretty consistent, even if markets adjust. And we talk about this in trader development a lot, but we don't really hope to predict what's going to happen. We're not great at that. We're pretty good at being aware of things that are going on, and then even better at when something happens, thinking, is this now a new pattern that occurred, or is this just like an anomaly? And Lance, and he does it independently too, his monthly reviews, it's like, if this happens once, you should study it. If a big event happens once, a big change happens once, you should study it and understand, if I see this again, how am I going to respond to that? So as markets shift, it's not that we're studying every opportunity that's ever existed and then getting in front of them. No, we're just aware that if there's something that was different, how would I capitalize on that if it showed up again? So if we can capture it the second or the third time, we're probably in the right place. What we don't want to be is the group where we really actively work to not be the group that's trying to capture it on the fifth or sixth time.
What's interesting too, actually, is when you have data, you can make better decisions. And so when you're part of a firm, or I was running an office, you have aggregate level data. And what's so cool is you get to see the changes in the data before you start to necessarily notice things on the surface. So of course, 2020 and 2021 were very opportunistic, but then you can start to see the P&L like, uh-oh, something's changed here. And it doesn't just go from great P&L to then negative, there's usually a rollover period. And so even when markets adapt, things don't go from working amazing to then not working at all. Usually what happens is if a trade used to work 80% of the time or 60% of the time and go this far, all of a sudden they start to work less often and go less far when they do work. And so when you have multiple traders, you start to get data points. And if I'm running a team or an office or a firm or a group or whatever, I can start to see, whoa, heads up everyone, we're starting to be having more negative days than we normally see. We're not having some of those big outlier wins anymore. Hey, we're starting to take a lot of bigger losses now. And if you're just on your own, it's hard to interpret that data. You always get the question from people, is it me or the market? But the beauty is once you have a pod or a group, you can start to make a more objective assessment. Oh, wow, we're all starting to struggle. Maybe something's changing. It's not just me, we're all struggling in this strategy. And then you can also do the next level, which is at the firm level, what traders are doing well? One indicator that I always love is when you have a young trader hitting above their weight class. So when you get someone a couple years in and they're still having 5-figure, 6-figure months, that's generally signal. And you say, what are those people doing? The people that are doing well now, how are they adapting that the rest aren't? And so then I think for Bella and Jeff, their job as leaders within the firm is to recognize those changes and use as models the people that have adapted and help kind of herd everyone towards that path. And if you're on your own, you only have data of one, which is not as great.
Yeah. So that sense of collaboration once again, being an EFA. One thing I was going to say is how important or how powerful has it been for traders to get direct feedback on their performance from that trading session? Because I know you guys, if I'm not mistaken, have like a morning meeting and then they'll trade the open and then a meeting thereafter.
Yep.
So they're getting this direct feedback straight after, before and then also after. How important has that been in their trader development?
I mean, we strive, and I've said this before, but we strive for 50 mentoring touch points a week for developing traders. 50. It's a lot.
It's a lot.
Right?
A lot.
Say 5 days of active trading and 2 half days of weekend sessions, or some people take a day off and then start again on Sunday or whatever it is. But, to get to 50 mentoring touch points, you have to, first of all, they can't be directed at one mentor.
Yeah.
You have to have a little bit of a community and different people stepping in, and that's really important to us. But a big part of that is that direct feedback, that almost, the market gives us instantaneous feedback. A lot of the conversations we have aren't, oh, you should do this or you shouldn't do that. It's, are you listening to the feedback that you're getting from the market? Or are you sitting there and saying the market's wrong in this circumstance? If you're sitting there and saying the market's wrong and I'm right, you might lose again very, very quickly. The market might be wrong for the period of time and then your idea might play out, but you still have to manage your risk accordingly. So it's important for direct feedback, but it's important so you can that feedback helps you understand what's actually happening and not just telling you, oh, you need to change that. I think one of the reviews we got from somebody at the end of 2024, one of the traders on the desk, a good developing trader, he was talking about how it's important for him to listen to the feedback that's being presented to him. Because if he does, then he notices that he comes out of any sort of turbulent trading very, very quickly. And if he doesn't, that's where all of a sudden that slope gets very, very slippery and he tends to make mistakes. And I think that's true of most traders. If you're engaged in listening to the opportunity, you can take the feedback from the market very quickly, but it does feel really personal. if you don't have a little bit of a filter, right? So in those 50 touch points of mentoring a week, we've probably got 25 or 30 of them that are more just guidance touch points. And then, the other portion of them are actually skill development touch points. It's how are you developing this specific skill? How are you using technology appropriately? How are you developing your playbook so that you can go from just scalping, which is the way we start all of our traders now, to are you looking at this other opportunity in that way? How can you enhance your playbook, your idea generation in different ways? Those are what the other mentoring touch points are, but about half of them are really just helping traders recognize that the information being generated by the market is really helpful to you, but you just have to listen to it.
And if I could just build on Lance's earlier point, some of the best mentoring comes from examining what's been working, what other traders have been doing that's working, what we have been doing that's working. There's a tradition in psychology that tells us do more of what works. Instead of trying to solve all your problems, figure out what's working, what you do well, and do more of that. And I think that's some of the best mentoring that can go on as markets change. See who's doing well, see what's working, and then build on that.
No, definitely. And it was interesting that you brought that up, because I feel like the sort of independent traders, that's one big thing that they always focus on the opposite. They just focus on what's going wrong, what am I doing badly, and then never spend time actually on what they're doing right or building upon that. And it seems to be like a bit of a spiral that they stay in, that they just constantly only focus on the negative and the negative. And don't get me wrong, obviously it's important to identify those things, but I think it's very powerful to focus on what is working as well. But in terms of,
and Riz, Lance said this firm here, our culture is not you have a bad day, bang the desk and hit the bar. Our culture is not also we had a great day, high five, go hit the bar.
Yes.
To your point, our culture is let's study the heck out of that trading opportunity that led to our personal best, to our great day. Let's study the heck out of it so that next time we make even more, so that we spot it when a similar opportunity occurs. And Dr. Steenbarger has counseled us for years about not just studying during our personal best days the trading opportunity, but also study how we came to the market so that we performed at our best. What led to us trading at our best? What led to us trading at our best? And then secondly, what's that trading opportunity? And let's study the heck out of that.
One of my favorite quotes, some of you probably know this, from someone I was close to years and years and years ago. Anyone who fights for tomorrow lives in it today. That's Ayn Rand, the novelist, philosopher. The idea is that when we are fighting for tomorrow, things can be turbulent, things can be challenging, there can be setbacks today, but we're living in the future that we're envisioning.
We just went to dinner with one of our best developing traders. He had made 6 figures in a month for the first time. So we went out to go celebrate that milestone.
In a trade. It wasn't even a month. He did it in one trade.
He did it in one trade.
One trade.
And he had his first 6-figure trade and his first six-figure month in his first year of trading. Outstanding. And in his review of that month and then of that trade, he talked about how it wasn't that long ago that a 5-figure trade, a 5-figure day was a huge deal. And the work, and he shared this with a bunch of us, and then Lance chimed in and said, it's the great work that you've been doing over the last many months, the detail that you've put into it, the detail you've put into the review, that's taken you from a 5-figure trade, a 5-figure month, to a 6-figure trade, a 6-figure month.
Because I do see Lance actually point that out a lot on Twitter in terms of the detailed write-ups that people provide. And why is that so important, the level of detail that you're going into when it comes to reviewing your trades and your performance?
Well, and I think this is something that Bella also just always harps on. And I mean, well, really all the guys up here, the most elite traders, every single thing they do is at the best level. And so every nuance they're paying attention to. And you need that attention to detail to succeed at this game. And to be a very good trader, there's so many variables you're processing at once. And so we've seen it just time and time again. Like, if I need to make a prediction on who's going to do well, the correlation between the amount of deep thinking and analysis and quality of nuance in their trade write-ups, in their reviews, it's just one of the best predictors. Now, again, that's not true if someone is just making it long and detailed for the point of making it long. But if somebody is truly doing the deep work and the focus and on their own imposing that standard on themselves to go that deep, the correlation to success
it's huge.
It's probably the best indicator I've seen.
It is, but it's, to your point, you have to be very careful because additional detail is not always valuable. You really do need to, I think the litmus test is essentially you can go back, if you can go back in like 5 years and read that write-up and understand what was happening and understand why it was happening and feel that trade and walk away with a lesson, it's probably pretty good. If you can read it tomorrow and you don't take much away from it other than I was really pissed and I this opportunity and I did this and I did that, you know, like that's when we're challenging traders and asking for more specificity. That's a big word on our desk, specificity. It's because we want them to be able to go back 5 years from now and read something and learn from it. You know, we in our development meeting today, we pulled up, somebody had asked a question about market context, right? How do you understand market context, which sets the stage for all of the trades that we're making? And I was able to go back and pull a document that I had put together 5 years ago or 6 years ago even, and just pull it up and share it and say, guys, I'm sure that you could update this, but this is what it looked like 5 or 6 years ago that we had just put together. And it's because of that specificity that all of a sudden you can go back to your resources and say, oh, I've been here before. I remember that trade. I understand that trade. I understand what I'm working on specifically. All those things become really important to be able to go back and do. So don't put more detail that's not valuable, but put it in there because it's going to be important. I mean, you know this, and you talk about this a lot. Trades have edge because of the story that's occurring and because certain participants are forced to act in certain ways at that time. And you have to identify, first of all, what's happening that's going to force a participant to act that way. But then even more importantly, what does it look like? And then you can start to experience it to see what does it feel like when participants are acting that way. I think one of the big challenges is people see a chart and they say, look how this person is acting, or these participants are acting, but there's no feel involved in it. And once you see it live and experience it and have those detailed write-ups, it's really easy to get back into that place and say, aha, I see what's going on. I see they're acting the way I expect them to act. You know, you start with the what is happening, and then very quickly you have to ask, why is it happening? And then third, how is it happening? And if you can do that and you've done really good write-ups, all of a sudden you're putting yourself back in a position of strength.
Would you say an element of a quality write-up is the quality of the questions you ask yourself based on that, you know, particular trade or that particular result or whatever it may be?
Yeah. Are you totally internal focused of I botched this up and don't talk anything about what the opportunity actually was? Are you totally external focused as in this happened and this happened and this happened and don't talk anything about how you acted when those different things happen? There has to be a balance there because it is in what happened and you want to understand that, but you also want to understand how you responded to what happened, because that's that double part of the edge. And we don't focus a ton on trading psychology early on. We focus way more on edge.
Yeah.
And if there's a lot of edge, you're going to put yourself in really good positions. And if you, even more importantly, if you understand how to back away when there's not edge, which a part of our training and development, especially when we're teaching people to scalp, is recognizing when it's just not there. And if you can back away when the edge isn't there, you're much more likely to recognize it when it is and then take advantage of it, and your risk allocation will follow that.
Are they quite often polar opposites? Like when edge isn't there, the things that you're identifying for it not being present are the things that then, when it comes to identifying edge, it's normally the opposite of those things?
It's not necessarily, I wouldn't say the opposite, but it's variabilization, right? Like there are certain variables that are present when this opportunity in this trade actually has edge. There are specific variables that are present that are just there. And when those variables aren't present, typically you don't have nearly as much edge, if not, if any edge. So I don't think it's the polar opposites. I think for the best ones, it is the polar opposites. You know, for the absolute best ones, the A++ opportunities, it is the polar opposite.
Yeah. No, I understand.
But all the real nuance comes in, you know, understanding, I mean, it's written on the board there. Baseline plus A+ equals your trading career, right? Down on the bottom left.
They're gonna wish the camera was the other way around. You know?
But I mean, but that's really what it is. You have to develop a baseline first.
Yeah.
And then those A+.
That's actually a question that's right here, actually. So when you start out, well, this was taken from a podcast probably about a year ago, I believe, or 2 years ago. But when they start out, they'll focus on daily stop. Early on, you'll size evenly across trades until you work out your A+ setups. And then the question was like, what would be the process of starting out on identifying those A+ setups? Because if you're teaching the strategies and the edges to them,
we're providing a structure around things that we've seen work. We're not necessarily, I mean, we have very clear trades that we know have edge that we do teach. But our expectation is that you'll take it and internalize it and probably execute it a little bit differently than the straight up structure. But that takes time. You have to start with, I think we were using this term the other day, steal like an artist. It's a great book if you haven't read it. And, you know, it talks about artists develop by copying other great artists, but they do it with the best detail they possibly can to develop their skills. And with our development of traders, we do expect them to learn the specific trades very, very in a detailed fashion, very, very quickly. And then ultimately we expect them to evolve that and take that context and apply it. And this is something that anybody can take and do to their own trading. You take the opportunity, and the opportunity is usually the technical setup, maybe the news catalyst, something like that. And you kind of develop a grade for that, right? So maybe it's an A+ super overextension, something is way extended and you know, has no business being up there. You see the volume capitulate, all that. That's an A+ opportunity. It's likely to mean revert very, very quickly. You're going to develop a budget for how much risk you're going to allocate to that. That budget is going to be a portion of your daily stop. So you're going to have a daily stop, but you're not going to say, I'm going to risk 50% of my daily stop here unless that opportunity warrants it. And then you're going to have some different trades that you can take within that setup, that opportunity. So it might be that I'm getting a hitchhiker. It might be I'm getting a rubber band. It might be I'm getting any of these trades. Lance talks about the bouncy ball a ton. It might be that you get a bouncy ball, right? Well, you're going to be allocating a portion of your opportunity budget to that trade. You're not going to be using your entire opportunity budget for every single trade. And so if you think about it from a bigger perspective, it's like, well, we were in Vegas together. And so it's like all the money that I'm taking into the casino floor that night, that's my daily stop. If I lose all of it, I'm totally done.
I wasn't in Vegas. I wasn't at a casino.
Well, let's say hypothetically, when Lance was there.
The other Lance
The other Lance B was there. So all the money you take into the casino is your daily stop, right? If you lose all that, you're done. Or at least you should be. Then when you go to play a specific game, you're not going to usually play all of it. Maybe you will, but you're going to probably have a specific amount that you're willing to budget on that game. That's your opportunity budget. And then you're not going to bet it all on one hand. I mean, we both know some people that would, but you're not going to bet it all on one hand. That's going to be per trade. So you're going to break it down into that. And if you do that, even from the very beginning, you're doing what we teach, which is dynamic risk allocation. And that becomes a baseline.
So you do that from the very beginning.
Yeah, I think we had pushed it out for a while, but now we're recognizing the importance of starting off with that, because you're just not going to get it right, but that's okay when you first start. It's really tough to learn it later, though.
Why do you think it's tough to learn it later? Is it just
because it's a
habit?
painful lesson? I mean, it's a really hard thing to really get your mind around if you've started with a fixed risk on every single trade. All of a sudden now I have to be dynamic with this, and as Lance said, there's so many variables that occur on an intraday trade that you have to process real time. So if you have to process those variables, plus now think about your risk, if you start out earlier, it's almost developing that habit.
You
from
want
the
to
beginning.
teach traders to be big traders.
Yeah.
That is something that big traders need to learn, to be able to risk more on special opportunities. You will find some people who believe in risking the same amount each trade. We don't trade that way. We push our guys to know when the odds are in their favor, when special opportunities arise, and to swing the bat hard, as we say.
I see the quote outside,
Swing the bat hard during those special opportunities to really make a lot of P&L.
Sizing properly is very hard, though. Why is it so hard? Because for you to size properly, that's dependent on you accurately assessing the trade. And in real time, of course, this happens fast. There's so many variables you're considering. And so you're already using so much RAM and mental processing to study the opportunity that, especially if you're new, though, it doesn't leave much RAM left over to figure out the sizing. And the analogy I always give is when you're a new driver and you're 16 learning to drive, you have both your hands on it, you're full focus, you're not eating a burger and talking on the cell phone and turning on the radio and talking to your friend. You can't do any of that because all of your RAM is taken up by simply, I need to press the pedal and go straight. And with trading, it's very much like that. So one shouldn't expect to be able to size well early on, but as you start to get so many repetitions, all those variables and processing that needs to happen accurately to size properly, you get faster and faster, and then you can start to dedicate more RAM and size more appropriately. But a lot of people get frustrated and struggle with sizing, and a lot of that is because it's a lot to process, and it comes with time and experience. You can't think you're going to magically start off that way.
Just a gradual process, for sure.
But it's similar to what we talked about. Traders on our desk, if you brought in, say we bring in, let's just say for easy purposes, we bring in 10 traders a year. We don't, but let's say it's 10 traders a year. Within the first year, any trader that is going to be successful will probably have sizing as their monthly goal, probably 2 months in the first year. That's how important it is every single one of those traders that's going to make it will probably struggle with sizing for at least 2 months in their first year. But then come the end of year one, when they're having really big days, it won't feel like a struggle. It's just a part of their trading. And the traders that haven't struggled with that will then think, oh man, my bet sizing's off. Oh, I need to work on this now. And then all of a sudden that runway is a little bit tighter on them, and they're not pushing themselves out and becoming that bigger trader fast enough. So it's really important to make sure you're starting with that and really putting yourself in a position where, yeah, you're going to be challenged. But that's kind of the fun of it too.
There is an advantage of the prop firm that, if you're paying attention, you're going to know what the big opportunities are from the other experienced traders. That, you'd have to be asleep. So there's that. I do want to make one important point of clarification for all this stuff. So we've talked a lot about developing 7-figure year traders. We're very proud of that. And developing 8-figure year traders. We're very proud of that. The first thing that our traders focus on is consistency. And when we're talking about sizing, we're talking, and it's still the beginning of their career, it's still in the context of them being consistent. And I can kind of hear you asking a question that we may not be answering, which is, hey, but if you get the sizing right, aren't you guys going to have young guys lose too much money? Isn't that irresponsible? It's in the context of their risk budgets. It's in the context of them focusing on being consistent. And then after they have shown that they are consistent, then we work on other things. But they are consistent. They do understand their playbook. They do have edge, and we're going from there.
Yeah. That was a good qualifier because consistency always comes first, especially for perpetuating the positive feedback loop.
I think now that you mentioned that as well, in terms of the general audience, their definition of prop firm, I'm sure there are those who do understand the traditional prop firms, and prop firms such as S&B Capital probably more than likely know S&B Capital, of course. But I'm sure there's a lot who are like myself, to be fair, for a number of years. Prop firm to me was, well, first, prop firm didn't exist in my mind. And then when it did, it come across these evaluation, these funding companies. So that's their understanding of prop firms, when in reality, that's far different and nowhere near in terms of caliber and resources and actual results being the same. So can we touch on, and in terms of that consistency comment you made, it seems like my information is a bit outdated, I think, so I want to be careful saying this. But through the internships that we talked about, one stage of that is simulated, right? It's not that they're trading live capital. So before they even get to that point when they're doing their sizing, they've already been essentially vetted, tested, trained to build that consistency. So it's not like they're just going straight to live capital and managing capital and
building a playbook.
Yeah.
Yeah, they're building a playbook. I mean, that's the term we use on the desk.
Yeah.
So, you know, just like any good business, we wouldn't expect someone to be able to go in and pull money out of the market randomly.
Yeah.
You know, that's not really, we want to invest in traders that are going to be big traders.
Yeah.
And they need to have a playbook and they need to have opportunities that they understand. So they are spending time on demo, but their objective when they're on a demo account is to build a playbook. It's not really to worry about their execution. They do, especially early on. They're like, look how much money I made on demo, and it's great. But that's, you know, sort of us sitting there and saying, yeah, but what did you learn? And that's really what the important phase of being on a demo account is to develop your playbook.
Yeah.
To understand those opportunities, start to internalize those opportunities. That is the value of starting out on a demo account, is to develop your playbook.
But we see that too. I don't know what to make of those funding accounts that consider themselves to be prop firms. I don't know how to change the internet so that people do not mistake them for prop firms. They're not prop firms. We're a prop firm, and a prop firm means you come into a firm, and that firm trains you. It trains you really well at a firm like ours. It's paying you to just focus on trading. You are given lots of capital that you earn. So you're not put up any money. We're putting up all the capital. When you earn it, we're putting a lot of capital behind you. As I mentioned a little bit earlier, you can be in your 20s, walking around S&B Capital with a 20 million plus trading book. You are receiving mentoring and coaching. You are sitting in on a structured 50 touch point a week mentoring that we've thought about so that traders have the best chance to make it. We're in the business of building profitable traders. That's how we make money. We make money if we bring in traders who make a lot of money and we split profits with them, and it pays for all of the resources which are immense, that go into building out traders. That's the business we're in. So we think about, well, how do we develop traders really well? So the 50 touch points a week with developing traders is a result of Jeff and I scrubbing every year how we can train people better. How do we get people up the learning curve faster? How do we develop people? How do we develop them better? And those 50 touch points are not just from me or just Jeff. It's from our team. It's from lots of other mentors that they're getting touch points with. There are people focusing just on technology. There are people focusing on scalping. There are people focusing on options. There are people There are people focusing on playbooks. There are people focusing on reviews. There's a person who just will answer any question you might have at any point during the week. And so we're putting that infrastructure in place so that we're developing traders at a high clip, and we're developing great traders. You have access to research. Hey, let's say you're not really sure what Tesla is going to do now that President Trump has won election, is getting ready to step into office, and he's BFFs with Mr. Musk, with Elon. All right, well, we're going to have, it's not just going to be your opinion on that, but we're going to have people who do this professionally tell you some of the things that are most likely to happen because of that. You're going to have access to technology that you're not getting anywhere else. You can't trade on our firm's technology unless you are at our firm, okay? It will make you a lot more money if you're a profitable trader. You're going to be able to, when you make a lot of money, go do lots of cool things with that money, invest it in other places. You're never going to have to put it into an account. We take care of that. All right? You're going to have the opportunity to trade lots of different products. We're going to get you access to options, futures, equities, foreign markets. You're going to be able to trade as a discretionary and automated trader. The point is, I can go on and on. The point is, you have enormous resources. You have the resources that you need to make sure that you're going to have the best chance to be a successful trader. You're going to have the resources that you need at this firm to make sure that you can be a kick-ass, big money, 8-figure a year trader if you have the ability. We're not here to make 50 grand or 100 grand. And that's great for lots of people. I'm not diminishing that. But that's not what we're here for. We're here to become really big traders. There is a mural that sits on our walls, which is a big part of our culture, which says, you're meant to do something great. Come to SMB if you want to be a great trader. Come to SMB if you want to do something great.
It's so true. And then it's really, you can see it through everything that you have in place, from all the resources to even the setup I briefly walked through, and even, as you say, the murals on the wall. Everything is set up for the trader to perform at their best. You want them to perform at their best. You make it so that they want to perform at their best. And they're only here if they have that sort of mindset as well, which I think is, incredible, and it's something I've not come across before personally within this industry. I'm sure the audience has as well. I want to finish up on this one quote. It's not really a trading related quote, funnily enough, but I think it relates to trading very, very well.
Then we can't help you.
I know. I'd love to hear your thoughts on it. And it's from
if it's on baseball, I might be able to help you.
Yeah. But it says, the curse of competence. And Chris Williamson said this. If you're good at things and have high standards, you assume...
I'll take this one.
Yeah, this might be one right up your street, yeah. So if you're good at things and you have high standards, you assume that you should always do well, which means that success isn't a cause for celebration, but it's the minimum level of reasonable performance. Anything less than victory would be a failure, and victory itself becomes nothing more than acceptable. Congratulations, you might be very successful, but you might also be very miserable. Do you see this within 7 to 8 figure traders and high performance traders? Have you experienced it yourself at all?
Very, very powerful quote, and absolutely. And I think as humans, we are almost programmed for hedonic adaptation, where as we progress and are used to higher and higher standards and better things, that becomes our norm. And that set point always goes higher and higher. And I think it's so prevalent in trading world where when you do well, your then base expectation is to do well. And when I was one of the top traders, my base expectation was I am going to have the highest P&L in the firm every single day. Any day I didn't, you feel less than. And so many traders find success by most definitions of it, but then they still don't feel great inside. And I think so much of that is part of what we're programmed to do, but so much of the challenge as humans, not just in trading, but in anywhere, is to find contentness in spite of that. And your standards can rise, but you can still find satisfaction. And one book I always recommend is focusing. It's called the Gap and the Gain, and that's rather than focusing on the gap of where you could be, focusing on the gain of where you've come from. And so I think tactics like that are very powerful. I think getting outside and in nature is powerful. I think giving back to others and being in touch with community and people around you. But I do think for most traders, and especially at SMB, there's many traders that always find themselves in their view underperforming and feeling less than as a result. And Bella, what was the sentence you said on the last review call?
It was brilliant.
Yeah, you were definitely brilliant. You were quoting a basketball player. What was it? The mindset you wanted one of the traders to.
Yeah, you want to be happy with your success, but not satisfied. So Chris Mullin was the basketball player who said that, and we had this discussion with a bunch of our traders during our last monthly meetings. So every month our teams meet and we have monthly reviews. And what was coming up time and time again was it was a really opportunistic month. Guys made a lot of money, but they all recognized that they could have made more. They all, when you talked to our traders, very quickly talked about specifically how they could have made more, where they could have entered with more size, how they should have held maybe a little bit longer, how they shouldn't have lost as much before the real trade set up. But, you know, some of the feedback we gave to them is, yeah, I mean, definitely strive to do better, but understand making $3 million in a month is not something to be unhappy about.
It's an altered reality. I mean, we live in an altered reality.
And it's a dangerous, toxic mindset, though. As much as we laugh about it, like, and I think people from the outside will minimize it and say, "Oh, yeah, you got to be a real jackass to be, you know, unhappy or feel." But I mean this quite seriously. You can make $1 million a month and be depressed.
Mm-hmm.
You can make some huge sums of money and still feel you underperformed and still feel unsatisfied and still not feel great about it. You know, it's first world problems, of course, but they're real problems, and it's important to adapt mindsets to combat that, because otherwise it's not a fun career you're going to have.
Mm-hmm. And we're fortunate to work in teams. I think that's been a big thing for that specific problem.
Mm-hmm.
You know, when you're working with others on a team, you still encounter those, but you know, a lot of what we're seeing is you're in it for the people that you're working with. You know, you're in it for the fact that you together as a team are out there trying to look for the next opportunity and take advantage of it. And I think it's a good question that you ask, because it is a big challenge and it's hard to balance that. But the teams help a little bit. Lance told all of us to read The Gap and the Gain, and that helped a little bit. And there are all these things that help. I mean, at the end of the day, this desk is full of some of the most amazing people.
Mm-hmm.
You know, they're incredible traders, absolutely some of the best traders in the world, but they're really good people too. And people that, you know, you feel lucky to be around, people that you feel lucky to know. And they're still struggling with that. You know, a lot of the traders that are still struggle with that. And there isn't like a just do this and everything will be okay. It's probably this constant thing that everyone will be dealing with. But
can I say though, I actually think we do a really good job of this. And I think we do a really good job of this because of the culture that we've set. And the culture from day one that we set here is you should try and get better every day. And so our traders, while money is the scoreboard, the result, what they're really trying to do from day one is just get better. And so if they didn't make as much money on a particular trade, they're unhappy about not performing at the highest level that they possibly can. But since they have a growth mindset, and since we've stressed a growth mindset since the start, they know that they can get better. And they'll shake it off and start to worry about it. I will just say, I do think, Lance, that you sit in a special seat in the trading community and have had special success in your results. For the people that are watching who perhaps have not yet made 8 figures in a year of trading and don't know what it's like to make, almost 20 million bucks in a year and have that. I think it's also just important to say that, and I say this, Jeff and I have families. We work, we go home, we spend time with our families. We really do drive a Volvo because we want our family to be safe. And, I think Lance is somebody who I know had a penthouse in Chicago and a lake house. There is this perception that independent traders want to make enough money to buy a Lamborghini. Maybe prop traders want to make enough money to buy a really nice apartment and a second house near the water somewhere. In fact, one of our traders was talking about how he really wants to buy a Lambo. And we were like, why don't you buy an apartment? And I think the trader who, is it a Ferrari? He wants to buy a Ferrari?
He likes one of the Porsches.
Porsche
One of the
911
Porsches.
GT3.
And
Yeah,
I was
GT3 RS. Yeah. He was texting me about it this weekend. Yeah.
It's like, just dude, buy an apartment. Like that's, but becoming good at trading does, if you have a growth mindset and you're trying to get better, the reward really is just being as good as you can be. And what comes from that is having money. It is a real thing. I think it's fair to say it is a real thing when you become good at trading, that it does afford you the opportunity to have really nice dinners, which is really fun. And it does afford you the opportunity to sit at really great seats at sporting events, which is really fun, which is perhaps my only contribution to your life, is getting you to appreciate the
Very noteworthy contributions, though.
And it does allow you the ability to give back, which is super important. And it does afford you the ability to provide stability for your family. And you can go on nice vacations, and you can live in a nice part of town, and maybe you can afford a summer house, and maybe you can send your kids to really good schools. That stuff, trading does, if you're good, that it does afford you the ability to do that as well, which I think is a nice benefit.
No, definitely. I think because that's what essentially every trader's goal is. But I think, as we touched on earlier, it's like they have these goals, but they're not doing the processes or work or putting themselves in the best positions, or collaborating, or putting them, forming a team. Even as you mentioned earlier, like even if they're independent traders, just finding 1 or 2 people, but making sure to provide value to get that value back. And I think it's a key difference to make. I actually had a quote for you, which you just ended up explaining anyway, from I think it's the end of your book and it's at the end of your email, but you can be better tomorrow than you are today. But you basically I was going to say, can we expand on that? But you basically expanded on it already.
All right, great.
But I really appreciate you all being here. And I know Brett had to leave us, but appreciation to Brett as well. Everyone at home, the links for SMB and every individual who wishes to have the links in the description will be there. So make sure you check them out. Hit like, hit subscribe, drop a comment with your biggest takeaway from this episode. I know there's so much. If I'm not mistaken, SMB has an office here, and then it has one in Miami, right? Here being New York. So I don't know. I was about to say, if you're in those areas, come just attend. But don't do that.
No, don't
Don't listen to me. But thank you very much. And until next time, everyone, take care.
What do I bring to the table? Excellent question. I am the table. What do I bring to the table? I am the table.
You are the table.
We're not looking for no more tables to sit at.
I just realised that I wasn't talking. Alright. I'm running it live right now. Just give me a minute. I'm just in the middle of this and Grok is not behaving himself, so I just need to get this done real quick. So you can remove that version. You were asking that question. So my script is, yeah, I think something's wrong with it. I'm gonna have to go check it because it's done this twice to me, where it's made these like real big jumps in price. Here's one here, and here's one here on this guy. So this script is, I mean, it works over time. See, this is the script result here. Over last year, this is all my trades on that script. But in saying that, I've got another system running at the same time on this account, which is stupid, by the way. I shouldn't be doing that. But it's because I lost my credit card and I couldn't transfer money to another account. I wanted to create a new account for my new idea, but I didn't have any money I didn't have any way to flip my money over to the other account at the time, so I just folded it into this setup, and it was silly, but it's profitable. You know, it's every trade it's taken is actually, every trade I've taken here has been profitable. And I've just been building this today, which I'm going to go back to this refined one, restore this version, which, let's just see what this tells me to do right now. I think I closed this trade early. No, we're up good. We're good. I might just close it anyway, because I don't have enough data. No, it's going up. Yeah, so I just finished building this today. I just got one tiny fucking thing to add to it. And then the script will be completed. And it'll be my main trading script for gold. I've been running it while coding it and updating it and shit. I've been coding it. I've been running it on paper. Since 8 PM. It's now midnight. It's almost exactly 4 hours. It's 7 minutes off 4 hours. And I've made $1,500 in 4 hours. At $100 a trade. Yeah. So then we get a 40% trade here, which is kind of fucking wild. It's $400 on a $1,000 account, and we market sell it. And I said 400, so I don't know what the fuck it's doing. There you go. So Grok is doing weird things. Yo. I put 40 into that. We're now at See if we can find some videos to watch.
One of the most important things in trading to understand.
Social media makes traders delusional. That's the one I wanted.
Introducing the #1 trader from Lithuania, yes, with a track record and almost a decade of experience in the forex markets.
You can backtest and say, oh, my strategy is working, but you're not testing your patience because you can scroll through hour candles in seconds. But when it's time to actually execute, this is where your emotions get tested. So do backtesting to figure out if your strategy is working, then do forward testing to figure out if that strategy is working for you.
Yeah, that's good advice. That's real good advice.
All of his trades with his track record to take an account from $25,000 all the way to $250,000 in a single year.
I really believe that profitable trading is not about guessing, it's about reacting. I hope my trade is going to hit take profit. No, I'm going to watch there, I'm going to sit, and I'm going to react to what's happening in the charts. And if the price is telling me that it wants to retrace, I'm going to start taking partials. So this is what I do. I prefer actually the more aggressive moves because I don't like when the price hangs around my liquidity or supply and demand levels too long, because I think that hanging around that ranging is just accumulation of stop losses, and if I enter inside of that accumulation, I'm gonna be the liquidity.
When you touch on the psychology topic, I agree it's totally important. Once you have backtested an edge, you've got some data behind it to then take it to the live markets. The gap is probably a psychology gap. Within that gap of performance issues or moving on too early, what would you say the main emotions, psychology components come into it in newcomer traders? Cool, ladies and gents, we are back with another episode. We are joined by a man, a very tall man, all the way from Lithuania. Thank you for joining us, Davi.
Thank you for having me.
So from what I remember, you've been trading for a long time, almost as long as I, so approaching the decade mark. And I want to kick off right away strategy related topics, because I've been through your track record. Even we were at dinner the other day, you passed me your phone, I had to scroll through your MetaTrader, and it looks like you're doing a bit of a challenge at the moment, which we can touch on. But I want to understand year one trader, the mentalities you had, the strategy you had compared to today, 8 years later, full-time trader and so forth. What are the differences?
I think the biggest difference is putting yourself in a frame. When you just start, you have 100 things floating around you, 100 strategies, 100 time frames, 100 approaches, you know, 100 assets that you're trading, but you slowly put things that work aside, that work with you, and the things that don't work aside, and put yourself in a frame that works, and you just keep going with it. So I think year one Davi was all over the place, and now year 8 Davi is, I know exactly what I'm doing every single day, every single time I approach the markets and I sit on my charts. It's a step-by-step systematic process, and a lot of people even say, oh, how do you deal with emotions? I don't need to deal with emotions. All I need is to execute my trading system. That's all it is. I let the markets decide how well I perform, how my system performs. If I need to make certain necessary adjustments, I'll do it. But if I don't, today I sat down, I know exactly what I'm looking, which is bias, liquidity, and then entry confirmation.
No, seriously.
Step-by-step process. That's it.
So therefore, technicals.
Technicals.
Mainly technicals.
100%.
And in the early days, I guess you were learning like most people do, just through the internet courses and whatever else. What were some of the common things that people use, that you used, that you ended up removing? And what are some of the things you kept?
I think we can start with the support and resistance. Support and resistance was always the main base. You buy at the breakout of resistance, which turns into support, basic. But once you go further and further in the trading, you realize that support and resistance becomes liquidity. So you turn it into your advantage by waiting for those fake outs to happen, waiting for those liquidity grabs to happen, and entering after it happens. after all those retail traders, beginner traders get stopped out. So that's how I approach the markets.
And that process of going from the things that don't work or things that were not serving you, let's say,
Yeah.
how did you go about, from all of this information that you had, as you said, a million ways you could trade, a million things you could trade, what was that process of refining down to the things you do like, and how did you select what was good and not good?
So I started a lot with back testing, you know, just trying to figure out what works overall and what works for me, because I think different things work for different people. Like, if you work a part-time or full-time job, I don't think scalping would be a suitable thing for you. You should be picking more swing trading, because you're not going to be able to sit at the charts all day because you're doing a part-time or full-time job. So picking the things that works for you and, you know, adapting by back testing, because I like to say back testing is to test your strategy, and forward testing, or in other words trading demo, is testing your mentality and your psychology, because you can back test, right, and say, oh, my strategy is working, but you're not testing your patience, because you can scroll through hour candles in seconds.
Yep.
But when it's time to actually execute and wait for the setup, this is where your emotions get tested, that your like psychology get tested. So first do back testing to figure out if your strategy is working, and then do forward testing to figure out if that strategy is working for you, you know, as a person.
Why do you think traders struggle so much with from back testing to live trading, or even forward testing in a demo account? It's the number one problem I see with people that I've seen at the 1 year mark compared to the 3 year mark. They'll be like, I understand the strategy, I understand the technicals, I understand everything. When I look at someone else's trade, I exactly see what they did, but I just can't do it in the live markets. But in back testing, I get
fucking
50%
seriously,
of the month.
every fucking time
What
you can.
stops traders
Stop
going
it.
from, you know, that emotional hurdle, and how do you overcome it?
This right here, you sit down every day, you open an Instagram, you see all these traders driving Lambos, posting profits. Subconsciously in your head, you get a feeling of, I want something today in year 1 that somebody in year 8 already has. You want to jump 5 steps ahead. So greediness and these type of emotions, I really believe that the strategy is not the main part. I don't want to be the trading psychologist, you know, or something like this, but I do believe that so many people around the world do struggle with really following the system, trading plan. Even people that followed me, I really sat down and told them, you have to do this step by step by step. This exact system will make you profitable. They will do it for 1 week, and after 2 weeks they start sending me setups, and it's like completely different things. Why did you move on? Oh, I didn't get a setup for 2 days. Yes, it's normal. Markets do not present you like an opportunity every single day or every single week. You know, you have to be patient. So I think that's the biggest problem.
When you touch on the psychology topic, I agree it's totally important once you have the edge. So it looks like you're dividing it when you've back tested an edge, you've got some data behind it, to then take it to the live markets. The gap is probably a psychology gap. Within that gap of performance issues or moving on too early and adding things into a system out of nowhere, what would you say the main emotions or psychology components come into it in newcomer traders?
Lack of confidence comes from lack of preparation. Once again, I don't have feeling towards the strategy and towards the market because I have back tested and forward tested my strategy, and I know what's the outcome. Then why would I change something? Only thing that I need to do is to execute my trading system correctly. So if you don't have that preparation, if you didn't put in that work that tells you that, okay, this strategy is profitable, forward tested, I was profitable, that if you don't have this confidence, you won't be able to continuously follow this system, you know, if that was the question.
So with my own personal goals of trying to learn more about the crypto markets, tapping into my network of some of the most elite traders in the world, they all tell me the same thing. If you took your knowledge and you learned how to apply it in crypto, you would make a lot more money in the crypto markets because there's a lot more volatility, a lot more opportunity, especially when you know how to leverage prop firms, which is not really a thing that exists in the crypto markets. And I thought, why not share that with you guys for a free event? Let's bring everyone together and you can learn alongside me with some of the best people in the space. This is free for absolutely everyone that wants to arm themselves on how to learn crypto in 2025. Why right now is the best time to get involved in the crypto markets, and what new opportunities have arisen in the crypto markets that a beginner or a newcomer can actually take advantage of. And therefore I am very proud to bring to you this Crypto Renaissance event, an event where it's free for anybody to attend and join, that will be taking place this Saturday, the 22nd of March. There will be limited seating because there is a capacity on how many people we can have in a Zoom call, so be sure to click and reserve your spot. It is absolutely free, and they're also going to be giving away so many things. For example, a full free course that thousands of people paid thousands of dollars for, they're going to be giving away for free, plus all the teachings that we have in the event itself. So make sure you click the link, reserve your place, and I'll see you live alongside the rest of the team for this Crypto Renaissance event. So the crypto bull market is well upon us, and with opportunities left, right, for free. So click the link below this video to head over to the Bitfunded website and start to utilize other people's money to benefit from the crypto markets whilst minimizing your downside. I wanted to understand, because when trading psychology comes as a topic, there's many things in that list. It can be greed, it can be FOMO, it can be anger, it can be hope, it can be... There's so many types of emotions that the markets can bring out, and probably amplifies what somebody has within. If they have a bad relationship with money, if they have rent that is due, all of these various circumstances in someone's life, their childhood, you know, it's a very broad topic. But I wanted to kind of hear what are the major ones that hold people back, if you can put your finger on any.
All of these that you just mentioned, I think, for different people and different things, you know, like you just said, there are some people that has a rent to, right? And you have to fight those. Everyone has a different story, and everyone has to figure out on their own. There's no secret key. There's no secret magic trick that's gonna make you profitable. You have to find your own way, and that is why trading is not easy. I never said trading is easy. Once you get, it's like climbing a mountain. You know, you climb the mountain. It feels like it never ends. Once you reach the top, then it's like a downhill. Then it's like, for me, it's like a intuition right now. It's like I'm sitting down and I see the charts and I know exactly what to do. It's like second nature. But the process before that was a lot of work, you know, and that's what a lot of people don't want to do, because once again, we're coming back to scrolling the social media every single day, and you see somebody's year 6, year 8, and you want to be there today. And I think that's a lot of.
When you were coming up in your journey and you had the same thing, you're seeing traders online that are ahead of you, years ahead of you, and so forth. How did you combat that to not fall victim of the emotions that you're mentioning?
I was doing the same thing. Like even now, as I came to the podcast, I have an app. For example, if you try to open MT5 right now, is it called Opal, right? I cannot open. So I was really fighting over trading. I would wake up in the middle of the night, right? And
half asleep.
I have a trade open. I'm closing it. Then I'm checking the charts and I'm opening them again. And at 2 a.m. I woke up. I look at the clock. It's 6 a.m. and I'm down $2,000. How do I deal with this? There's that many different ways. I found this. There's an app. Literally, you cannot delete the app. If you delete the app, you cannot open. There's still the apps that are blocked. Like there's no way I'm gonna touch this right now. So I found a way. I started with MetaTrader. Now even Instagram and WhatsApp is blocked, and it's called wind down for me from 9 p.m. to 6 a.m. I cannot touch social media or trading apps, and it becomes once again a routine. That's a tip for everyone right now.
I think that's very important, because let's say the topic of patience, where you're supposed to be patient for a setup, or patient till you take profit, or patient to let the trade play out, and the story you just mentioned of half asleep, I've been there too, messing with trades and in no state of mind. You wake up, you're like, how did that happen? But at the time, it makes so much sense. So when you have that emotion, there's ways to deal with it, I guess, which is
100%.
You know, the typical ones people speak, you know, meditate yourself, or meditation, or learn stoicism to be more calm under these emotions.
Yes.
Or more simply, just know how to walk away. Patience is like, I need to sit in front of the screen and sit on my hands and go through all these emotions and not do anything. That's kind of torture. Or you could just like go for a walk, or lock your phone, or you know, avoid the situation altogether, which is probably the easiest thing to do in this sense. I want to take this back towards technical. So you've done, I guess, challenges in your career, including something right now. Is this something that you do often, in terms of you take a small number to a large number and that becomes your play money, or is this kind of a side quest?
So the chat.
Well, that says that I'm connected. What's going on?
Deal to manage large portfolio of money from private investors, which I cannot really speak about at this moment. So I was really focused on that. I also run social media, so I gotta put effort in this. So I kind of started playing around, but I didn't want to be the guy that's like, hey, I'm gonna flip this 25K account to million in 2 days. I don't want to teach people gambling. I want to teach people actual risk management and the growth. So I started this challenge with risking from 1 to 6%. Yes, 6 is a little bit a lot, but I do value my skill, and I think I have a skill to do that and maintain that. I do not recommend that for everyone, but I started this account, started sharing this. People love it, people follow it. Every single day for 3 months, I've been trading this account live. Then I started traveling a bit, stopped doing lives, but now this account is at 250,000, and it's
When
actually
did you start it?
September
And what was the
6th,
deposit amount?
25,000.
Ah, okay.
Yes.
Wow.
Yes.
And the risk that you're doing between 1 and 6%, how do you decide, or what makes you decide 1 versus 5 versus 6?
Great question. So, like I said, I first build bias. What is my bias? Is it bullish or bearish? I never go against the trend. If I identify that the weekly time frame is bullish, that means I'm only gonna look for bias. Okay. But now, if I see that the previous weekly candle is bullish, but I go to daily time frame and I see that daily market structure is bearish, I'm shaving off my risk. So some of analysis, it's not just for me to decide if I'm going to buy or sell, but it's more like me shaving off a risk. I pick a bias if I'm going to buy or sell. Everything else is me like shaving off the risk. So if everything is in structure, everything is bullish for me, beautiful zones, I'm gonna risk more. If there's things that doesn't tick the box, I'm shaving off my risk.
So basically your risk tolerance is around weekly trend, or is just high time frame trend in general?
Previous weekly candle. Because look, if I see that the previous weekly candle was bullish engulfing, it's more likely than not that the next week is also going to have more bullishness than bearishness. Is there a chance that one candle is bullish like this and the next candle is bearish like this? Yes, but it's way lower chance. Okay. So now I go to daily time frame, I identify the market structure, then I go to 30 minutes to find the liquidity. I only look for liquidity inside of, for example, if I'm trading Euro JPY, I'm only looking for liquidity in Asia and London session.
Okay.
And if I'm trading Euro USD, I'm looking for liquidity in London and New York session.
Makes sense.
Okay.
Yeah.
So I'm looking for those supply and demand levels in those sessions. And then once the price comes into my liquidity zone, the last thing, like I remember I told you, step-by-step process. So first, bias. Second, I find my liquidity. And finally, once the price is at my liquidity, I'm waiting for entry confirmation. And entry confirmations, I have different things. The most basic ones are reversal patterns, which are not as effective, but they work as well.
When it comes to a multi-time frame read, so in an idea where everything is kind of bullish, that makes a lot of sense, look to buy. But more often than not, it will be mixed, where weekly is bullish, your 4 hour is bearish, your M15 might be bullish, and you could be like, okay, price is bullish on the weekly, yes, but right now, this week it might be bearish, maybe today it could be bullish. When it gets to this multi-time frame read, which is more often the scenario, how do you position yourself, or how often are you even taking trades? Are you just waiting for weekly zones? Or
Great question. So I don't go through all the time frames.
Okay.
For me, there's weekly, daily, 30 minutes, and 5 minutes. My main
Okay.
time frames.
Okay.
Weekly bias, daily market structure, 30 minutes. Liquidity, 5 minutes. Entry confirmation.
And will you only take trades alongside your weekly bias? For example, weekly is bullish, I'll only look for buys, or weekly is bullish, but I still find sell opportunities.
If not all the candles are engulfing. So if I see that previous weekly candles were bearish and current weekly candle slightly bullish, then I'm gonna pay more attention to daily market structure. Okay,
Right.
so if it's more indecisiveness in the weekly time frame, I'm paying more attention to daily market structure.
And when you talk about market structure, you're talking simple demand and supply zones.
I'm talking about higher highs, lower lows, and identifying bullish market, bearish market, or consolidating market.
Okay.
Another thing is if weekly is bullish but daily is consolidating, I'm shaving off my risk.
Okay. What if daily is bullish, consolidating on the day on a intermediate time frame, and then you're looking for liquidity. Liquidity means consolidation, and then I guess a wick's low. You're looking for that rejection to go high.
Yes.
So consolidation and then
Fuck, there's a
liquidity.
lot of movement here.
Is that something you want to shave risk off, or is that something you then?
So you're saying if my weekly is, for example, bullish,
Okay, yes.
and daily is consolidating?
Yes.
Okay.
And then on M15, M5, your lower time frames, you start to see a run of liquidity low, and you're looking for a buy opportunity.
Yeah.
Does that consolidation help you because now you found a liquidity pool, a support level? that you
Exactly.
mentioned? Or does consolidation give you indecision and you actually want to be risk off?
If it doesn't give me a confirmation, which gives me indecisiveness, if I have to look for liquidity, sometimes when you open the charts, bam, 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 everything is perfect, easy. But sometimes you catch yourself, maybe this is the correct supply zone. Maybe this is correct the demand. When I catch myself trying to find something where it's not existent, that's where I'm like, I'm either staying away or shaving off the risk again,
And when it comes to take profit levels, so assuming you're doing a 6% risk trade, this is a very good trade that you like. You're entering on all the way down to M5, your lowest time frame. Is that for executions, I guess?
Beautiful questions, man. I love it. I can speak about this all day. So I say that profitable trading is like a triangle formation. It's not just a strategy, because one corner of profitable trading is strategy, the other one is risk management, and the last one is trade management. So we talked about the strategy, we talked about risk management, me shaving off the risk, and last one, now what you asked is trade management. So you literally asked all the questions I wanted. Beautiful. So for the trade management, I do very, very simple things. So I set my take profit to at least 1 to 3.
Okay.
And then on a 15-minute time frame, I mark all the, for example, if I'm looking for buys, mark up all the potential resistances.
What does resistance mean to you?
Basic resistance levels.
Okay.
So inside of my 1 to 3, inside of my take profit, I mark up little zones, okay? And as the price is moving, I'm reacting, because I really believe that profitable trading is not about guessing, it's about reacting. And your decisions need to be logical and not emotional. I don't want to hope, I hope my trade is going to hit take profit. No, I'm going to watch there, I'm going to sit, and I'm going to react to what's happening in the charts. And if the price is telling me that it wants to retrace, even though if it's in profit, I'm going to start taking partials. So this is what I do. I enter, I mark up potential zones where the price can reject. If I start to see that as it approaches one level, starts to reject and starts to move down, I close 10%, 15%, 20% of my position. Okay.
So you have a 1 to 3 zone that you want to target, but based on how a price is reacting, it changes on the day.
Correct.
Let's say. And what is let's say you have a resistance level just shy of your 1 to 3 ideal area. Because I've been in the situation where I have a desired zone and price is, let's say, 20 pips away, and I'm seeing bearish candles. I'm like, okay, this might not be the move. I take a partial early and then it goes anyway. It goes to my original TP. How do you avoid yourself in a scenario where you're maybe too aggressive in your take profit levels, or what is a valid rejection to justify let's hold the trade versus I need to take a partial now?
I want to take a moment from the episode to remind you of Alpha Capital, a long-term sponsor of the show, a leading prop firm in the entire industry, and in the last year they did over $50 million in payouts. That's why they are a top-ranked prop firm that's been around for years and is not going anywhere. And with the multiple step plans they have and the multiple packages that they have, there is going to be something catered specifically to your needs at the most competitive pricing. And because we have a long-term relationship with them, we are able to bring you a massive discount of 20%.
Bit smart. So, yeah, I mean, you're not going to be always correct 100%. It's the markets. It's your part of a job as a trader. You have to deal with these things. I had times where the price came 2 pips away from my take profit and reversed. And it's just part of the game. But more times than less, you're going to make money. Because I do believe that traders who take a little bit of money from the markets, time by time, it's those who stack the cash. It's not the ones that are looking for the big bag, but it's the ones that are, a little bit smart, a little bit faster with taking profits, partials, a little bit more patience with their money stacking, is who make money in the markets. And that's how I trade, Also, another thing what I do, if my price reaches take profit 1 to 3 or 1 to 4, for example. What I also love to do is leave 10 or 20% of the position running with stops at break even. Forget about it. Sometimes 2 weeks later, that 20% becomes a full new trade.
Yeah.
So now you lose in the future, it covers your loss. You know?
And that's only because you are aligned with a high time frame trend.
100%.
You can afford to just leave it and
Weekly.
see what
There
happens.
we go.
Makes sense.
Yes.
When it comes to the 1 to 3 area, I want to understand the significance of why 1 to 3. And maybe this question is more rooted in the stop loss size that you have, because you are utilizing many time frames, but the M5 is your lowest time frame. Is your stop loss based on M5 price action, or
It's purely statistical. I did a lot of back testing, and I tried my strategy with 1 to 1. I tried my strategy with 1 to 2. I tried my strategy with 1 to 8. Over hundreds of trades, I realized that 1 to 3 is my ideal.
Okay.
Right? Yeah. So
and is there a reason why you found it to be the 1 to 3, or is just that's what
it
they
had
did
the
to show?
highest win rate. When I back tested like hundreds of trades, I realized that 1 to 3 had the best, not the win rate, but best profit when it's accumulated over many trades.
And what is your average stop loss in terms of pips?
I'm looking at 15 pips.
Okay. Okay, so your take profit level, your final take profit, because you only have one and then a runner, sometimes can be in the same day.
Yes, it's always another rule that I have is I'm trying not to hold the trades overnight because I value my sleep, unless the price is really into profit. Okay. Because once again, I had a problem with waking up in the night, making bad decisions. I said, okay, let me drop to lower time frames. Let me be more of a scalper. I wouldn't call myself a scalper, the 1 minute, or whatever. But I want to get in and out. I want to have a family time. I want to go out with my friends and not to think about trading, because I had like first 3 years, all I could think is trading. I would sit with my ex-girlfriend, and I would sit on an MT5, and it's like hurting my personal life. It's hurting my relationships, and it's like, why? It's once I started treating trading like job, like business, it's when I started making money. Once I got tired of trading, once I didn't have the adrenaline rush of trading, it's when I got better. That's where I got profitable, because I stopped making bad decisions. Like I'm here to execute. That's all I'm here for. I have a strategy that works. I'm here to execute. That's how I look at trading anymore. Like it's not a hobby anymore. It's not like I'm here to play around or get an adrenaline rush.
I want to understand, because we're getting into details of your average trade is probably the same day in and out. Therefore, you are a intraday, intra-session, depending on the day kind of trader, which myself too. And the reason I want to ask this question is because I'm in and out in the same day, maybe sometimes the same hour for my first portion at least. So therefore, I rarely look at the weekly time frame. All right, maybe even I don't spend maybe 30 seconds on the daily time frame just to know my zones. If my supply zone is here, my demand zone is here, and price here is today, then those time frames don't mean anything to me, because it might take a week to come to one of those levels. So with the same day in and out approach, usually my home is H1, M15, M5, M1, because those seem more relevant for the day, unless they are arriving to higher time frame zones. Why do you still keep an eye on the highest of time frames with just an in and out in the same day approach, where you're not going to meet that daily swing move apart from your runner?
I'm not gonna meet that daily swing move, but what I have is it's gonna sound funny, but like peace of mind for the whole week. So I see that the previous weekly candle is bullish. For the whole week, I'm only gonna target bullishness. So for example, if the price reaches my supply area and doesn't give me an entry confirmation, it's most like, if I'm looking for buys, it reaches my demand area, it did not give me an entry confirmation, it's most likely gonna continue drop, right? Until it finds another demand, it gives you an entry confirmation, and that's where that current weekly candle is going to start going up. It's like reading the charts and timing your entry. That is why I have a systematic process, is because I'm not going to take a trade unless all of these boxes ticks out.
And just out of curiosity, because in my early days I was doing something similar where I was doing a top down. I was kind of a swing approach, but I'd still go down to the lower time frame just to get a sharper entry. So weekly zone, refine it down, and maybe an M5 execution.
Yeah.
And then I would hold that trade for the full swing, knowing I'm in a weekly demand, and I've got the trend on my side. Instead of taking out in the same day, I'd take a partial on the day or maybe the week, and then let the rest hold for a week or two. Why did you remove majority from the swing move? Because if you're in a weekly demand, you've got the weekly trend. Why not become a swing trader?
Why not? Because I like to time my entries, and my stop losses are like 15 minutes. And once again, like, I don't like to hold the trades overnight and over a weekend. When I'm holding the trade that's 10 or 20% of my position, I don't care about it anymore. I have my stops at break even. It's more like a,
let's see what happens.
yeah, it's like let the dog play, you know.
So it sounds like you're adjusting your technicals and your strategy and everything based on your personality. You just found that the phone and being in a trade would mess with your personal life, mess with your sleep and whatever. So as a result, instead of looking to resolve that, let's say you thought, okay, let's just build a strategy with my strengths.
Absolutely, 100%. Like I said in the beginning of the podcast, every person needs to find their strategy based on their personality, and it's not that you just need to focus on strategy and not just focus on your personality. It's a work to find the balance between two, and that's what I did.
How about what is your strengths, your personality, and finding a strategy that is catered for you, let's say, which is a journey, but I think the roots within that make a lot of sense, versus my personality says this. Let's say, like yourself, my personality is I need to be more in and out in the same day. I'm more better at the lower time frame, and this is what suits me. I like instant feedback, not knowing if I was correct in a week. I want to know in the same hour. That's more catered for someone that is a intra-session scalp, intraday trader. However, I work a job and I just can't access the lower time frame because I can't be on the screen because I'm out doing my work. How would you balance that? Because that's a very common problem I see of, like, I really want to learn M1, I really want to learn liquidity, but I can't be present in front of the screen during a London session, so I have to leave limits and put large stop losses. How do you navigate that problem?
So I think the strategy that I'm using could be used by anyone by adjusting the whole time frame structure. Okay, so if you want to be more a swing trader, you look at more like a monthly levels, then go to the daily, then go to the 4 hour. It's more like a shifting of time frames. If we want to be like absolute scalper, 1 minute, you look at 10 minutes or 15 minutes. It's like a shifting of a time frame, I would say. So, and I do have like people that does the strategy in different ways, but the approach has to be, more like a similar to what I do, rather than, time frames and stuff like this. It's adjustable.
With your journey from this 25k to 250, obviously that's a huge, hundreds and hundreds of percent. With a, let's say, average between 1 and 6% risk, let's say 3% on average per trade, and you're doing 1 to 3s, a positive trade in your favor might be 9%, let's say.
Yes.
If we had to average out, maybe you have better numbers to tell. But what did that journey look like in terms of number of trades? How often are you taking trades? Win rates? Trade duration we've kind of covered, but what are those stats like in this challenge specifically?
So I've been trading this account for 3 months every day, Monday to Friday, live. I think I was streaming on Kick and then a little bit on YouTube, doing everything live, and I would do 1 to 3 trades per day.
Oh, okay, very aggressive.
Yes.
In which case, how many currencies are you looking at?
I'm looking at 6 assets.
Okay.
Gold, Nasdaq, US30, Euro JPY, Euro USD, and GBP USD.
I see. So the reason I'm asking this is because if you're someone that's looking at the weekly time frame and you're looking at for higher time frame zones, obviously not every day can be an opportunity, but when you have many things to look at, one of them.
Yeah, one of the most common questions I get: how many trades do you take per day? I don't know. If the market gives me 6 opportunities, I'll take 6 opportunities. If there's no opportunities for the whole week, I'm not going to take any opportunities. I'm here, once again, I'm here just to execute a trade. If you have this relationship with trading where you have a relationship with the strategy and with the markets where just I'm here to execute, that's where you're going to succeed. Instead of, oh, today my goal is to make $150. Shut the fuck up. Like, literally, it's such a gambling mindset, or I want to make 15 pips. Like, I let my strategy work out and the markets work out, and if I make profits, I'm happy. If I don't, I'm not happy, but it's part of the process.
And why these 6 that you've chosen? Is there any reasoning behind that?
Once again, a lot of backtesting and analytics, and I noticed that those fit my personality the best, and those fit my strategy the best. Trust me, first 3 years, I was like, everyone who was around me can confirm this. 5 a.m. I'm up before practices, because at the time I was going to college playing basketball. Before practice, during the practice, I would say, can I go to the